this becoming clearer in your mind? If it's not, today is the day. Today is the day of judgment for you. By the end of class tonight, this stuff should start clearing up. If it is not, we need to do some work on the side on emails or some other way to make sure you guys are getting this, all right? A lot of success stories pouring in. Fred posted from California that he was up 800 pips in the GBP USD. I actually have a screenshot from him tonight. When he sent this out to me, he was up about 400 pips. I wanted to cover these things for you guys real quick. We'll go over the overnight folders. The patterns are there. I hope you're seeing them. Very, very excited. You guys are doing really well. Let's look at some of these charts from last night. See if you guys can see these. Okay, that's weird. Okay, I'm on fit to screen. Can we see that now? Okay, it just popped up on my end. I can see that you guys can see that. Okay, this comes to us from Bruce out of New York. Bruce, fantastic trade. Let me zoom in a little bit. Okay, he caught the bottoming out at the session. It repeated the level to the low. He caught a nice run back to the mayonnaise. 54 pip gain, closed it out. He has the small W. Notice inside the TDI, it painted exactly what we're looking for. I will cover this stuff. Okay, this is Fred's chart. If you guys can see that. Let me scroll over to the end here. He bagged about 400 pips on his run. He caught the double top high. There's the peak formation. Repeat the level. Don't break it. Nice run down. Hit the stops high. He's a seller. Scaled in, scaled in, scaled in. Killed it. Exit at the bottom. Makes the bounce. Could trade it back into here. Anyway, there's his run. There's about 486 pips in there using minis. Okay, fantastic trade. Fantastic. All right, I promised you that I would show you the news trade that I told you they use the news to hit their targets and use their triggers. All right, look at this chart. Perfect. Peak formation high. Level 1. Notice inside of level 1 there are 3 levels of drop. 1, 2, 3. Market makers make the pullback. Second leg W back into the range. Right to the mayonnaise and the water. Okay, you got some watered down mayonnaise right there. They nailed it. 1, 2, 3 to the low. Second leg, buy back, trade back towards the water or the mayonnaise target. Back into consolidation, day 1, level 1. Day 2, they hit the stops high, hit the stops low. You know that this is peak formation high. You do not trade against the peak formation high. You trade in line with it. So this is a sell trade only. When they hit the stops high, you're a seller. You have a nice couple of bursts in there. 1, 2, 3 to the low. Back into consolidation. Later that afternoon, the FOMC meeting was about to start. They went into heavy consolidation, hit the stops, contain, bring it in, bring it in, bring it in. When the news was released at 2 o'clock or 1400, they spiked to the low in the afternoon, hit it again, and put the brakes on. That's how the day ended. They then came back in the Asian session and hit it again. Notice that they did not break the previous low. Outside of the box at the London Open, this is a downtrend to the rest of the world. To us, when they throw the spike at the London Open, you are a buyer. Why? 3 levels are seen. 3 days of drop are seen. You are a buyer against the prevailing trend that is out there. Okay, so you have your peak formation high on day 1, level 1 complete. Notice the 1, 2, 3 inside of the intraday. So level 1, day 1 contained 3 levels of drop. Market makers lent out their money for 3 cycles. They needed some back. They spiked right back to the mayonnaise. About the 50% fib level. Take the high and the low, the middle or the difference is right about the 50% fib level. They spiked right to it. There's your fibs for you guys. Back into consolidation. You know that this is peak formation high on day 1. You are a seller in line with the peak. Okay? They hit the stops low, hit the stops high. You don't fall for this crap right here because you know that you are a seller. in line with the trend right now because the definition of the technical trend just so happens to line up with the market maker trend. Now, here's what happens. They hit the stops high, 2 pins to the mayonnaise, I told you, is a sell signal in line with this peak. Okay? You are a seller. 1, 2, 3 to the low, get out. The trade is over. They make the second leg and pull back into consolidation, but it does not offer that many pips. This box is about 38 pips. This trade might have been a scratch of about 15 pips or so. If you bought in on this hammer and it went high and went back into consolidation. But you know the news is coming. You know at 1400 this news is coming. You should exit this trade and call it a day. You know what FOMC does to the markets. Right at around 2 o'clock, market makers spike to the low. They hit it again to show a continuation of the downtrend triggered by the news. But we know that this is the completion of the level 3 pattern. We know it is BS. The averages are fanning open. The rest of the world thinks downtrend. When the spike is thrown from the news, the rest of the world turns short. The money is now heavy short. Market makers need to come out of these positions, reverse the trend. Why? Because they are net short. I'm sorry, they're net long. The world is net short. The only way for them to make money when they're net long is to raise the price, period. So what do? Hit the stops, hit the stops, hit the stops, induce, trigger the stops of the people that went long. Anyone that's long in here is now stopped out. Anyone that is long in here is now stopped out. Why? Timings. The stop is hit at the London Open. When the stop is triggered, you are a buyer. So if I was to send you out a signal, my signal would say, buy downward stop hunts against the prevailing trend. You are a buyer. Wait for the stop hunt. Buy downward stop hunts against the trend. This is absolutely against the trend. The 50's down, the 513 are down, below the 200, price is trading below the 50. This is when they book their profit. When they rise price back into the range after 3 days of drop, this is how they get their money back. They spike right against everybody else, all the trend traders, all the breakout traders that were short, everybody is now stuck. Okay, and if you notice the thing that's going on here, if you bracketed this, they hit it high, hit it low, they destroy the breakout traders. Okay, you look at the big picture, the 3-day cycle. Where am I in this cycle? That's the question you ask yourself. Steve, I see level 3. Level 3 behavior erratic. Level 3 behavior is erratic. Spikes to the downside. Notice in the other levels the spikes are up, and in between the other levels they're on both sides. But what happens is the spikes start reaching to the downside. You will see the head and shoulders. Is this a head and shoulders? Could be shoulder. I don't know, maybe a small head, shrunken head, and then a shoulder, right? I'm kidding. If this was a little longer, it would be the typical head and shoulders pattern. This is what you will see in level 3. If you identify the shoulder and the head, wait for the stop hunt to form out the second shoulder and go against the trend. You are trading against the trend. It is not natural if you've been trading the other way for years. Trust me, it pays. Okay, wanted you to see that. This was July 20th going into the 21st on the Euro USD 15-minute chart. It's a fine example. Go get it on your charts and mark it up. Okay, you have beautiful trades in here every single day. Consolidation right out of the Asian high. Look, they shifted the zone. Think about this for a minute. Let me go over this chart again one more time for everybody. Some people say lights are going on. Okay, here's the consolidation, right? What do? They have lower level shorts trapped, so they shifted up and changed the consolidation zone. They changed the consolidation zone a couple hours before the session is over. Remember I told you they make the false move at the end of the session. Look at the blue box. Damn if they don't go 1, 2, 3 to the high right out of that box and end with a hammer. 3 candles right out of the box. 1, 2, 3 to the high. If you see that, it's game over the other way. Okay, they quickly pull off, go into consolidation, a half a Batman perhaps. Okay, but I don't want you to deal that far off of the high. I want you to deal in here. You will learn to deal. Okay, now, level 1, consolidation. Hit the stops, drop. Hit the stops, drop. Trap low, trigger, hit the stops. Anybody that went long in here in this little bridge was triggered right here on that pin. Now rise back right to the watered down mayonnaise. Right back to the watered down mayonnaise. Damn if they didn't hit the 50% fib right in there. Okay? Consolidation, accumulate, end the day. Start up the next day exactly the same. Now what happens? Maybe the breakout traders did okay. They only went one way. Maybe they booked a profit. Well, guess what? They ain't going to book a profit today. They don't want them to. So here's what they do. Bracket the high, bracket the low. There's your breakout traders. There's your spike down and your spike up. Breakout traders are soaked in and beat to hell. They got stopped out twice on that cycle, and most of them won't take it a third time because it hurts. Breakout traders are absorbed and killed. They go back to the high, 2 pins to the mayonnaise, in line with the peak formation high. You are a seller. No other trade is warranted. What did I tell you? Never trade against the peak formation at a level 1 consolidation. Say it to yourself in the room, write it down, pin it on your bulletin board. Never trade against the peak formation at a level 1 consolidation. It's a nursery rhyme. Okay, when they pin to the mayonnaise, that's a trade. 2 pins to the mayonnaise, railroad tracks to the mayonnaise. But in this case, you have a variation on the theme. Railroad tracks to the mayonnaise and a pin to the mayonnaise. That is a baby M formation in line with this peak. Sell. Stop loss goes right above the 200. Perfect. Then you got your 1, consolidation, hit the stops, drop. 2, consolidation, hit the stops, drop. Clear the board, spike to the low, spike to the low, spike to the low. Pull back ever so slightly and into consolidation. Why? They knew the news was coming. So they wanted to hold the lower level people trapped to decide which way they were going to go. They hit the stops, lighten the load in both directions. They're into a tight pennant or perhaps a flag pattern, whatever. I hate those patterns, but that's what's going on here, okay? Now, 1400, the news comes out. I hope to God you're sleeping and not trading this, or you're away from your terminal, because that means that you were sitting there from London Open all the way to 1400 the next day. It's not necessary to sit there all night. All you do is walk up to this chart on July 22nd, and you see the 2 days prior, July 20th and July 21st. You look and you go, peak formation high, 1, 2, holy shit, 3. They cut the low. There's 3. They spiked it again. Look at that pin to the bottom. They trapped. They went into consolidation. They hit it again at the Asian session. Now, how do I know this is going to hold? I don't. But when it does, in fact, hold and they issue the hammer right out of the London Open just outside the blue box, lights out. You are a buyer against the prevailing trend because you know the market maker trend has been completed. You are going against the rest of the world. Now you're trading like a market maker because that's who's going against the rest of the traders and the rest of the world. You are in line with the market maker. Go back and look. If you don't believe me, July 23rd, this trade netted about 150 pips without scale-ins. It took back all of the gains or losses over the last 2 days for them to book a profit. It finished out quite nicely. All right, does everybody see that? This should start clearing up for you. Also, RSI was divergent. Okay, this is from a gentleman, Roger. He's in here. He's a fantastic guy, and I'm actually very, very, very proud of him. Why? He's a scalper. 5 to 10 pips was his game, and he was very good at it, but he's starting to turn the corner. Okay, he wrote, Steve, the Euro USD hit the 132.65 after 3 pushes up and pulled away quickly. He realized that it was a possible M formation. It took 2 3/4 hours. Where I come from, it's 2 hours and 45 minutes. Okay? 2 hours and 45 minutes to complete the pattern. That's plenty of time for you to make a decision. But it did come back to the high without breaking it, so he took a short. See the chart attached. I'll show you. His max drawdown for the trade was 8 pips. I don't know if you guys heard what I said. His drawdown for the trade was 8 pips, 2 of which are the spread. Think about how amazing that is. He scaled in. His first lot was, he used a foot soldier, what I will talk about. He scaled in a couple more times. Trade 1 netted 50 pips. Trade 2 gave him 41 pips times a couple of units. Trade 3 gave him 15 pips times a couple of units. For a total run of 274 pips in a 50 pip move. He's trading a mini account right now because he's learning. But on a standard account, that's $2,200. I'm sorry, he made $274 on a $2,200 account, minis. That's a 12% increase in one trade. If you do 10 of those, that is a 120% increase. Can you do 10? Absolutely. People are doing it. So if you think you have a small account, if you think you don't have enough money to trade this method, doesn't matter. A couple $1,000, you could start with $500 and use scale-ins on micros. Once you understand how to beat these guys, it's simple. I'm very proud of Roger. I don't know if he's in here tonight or not, but great job, Roger. I just can't even say enough how proud I am of you. Okay, this is my guy from New York. This is the guy that made $23,000 in a day. He has since ramped up. He's doing very well. Do not contact him on private messenger. Everyone bothers him every time I show his trades. I'm not even going to say his name right now. He's a fantastic person. He is only 21 years old. Okay, look what you have here. Don't you have the spike to the outside low? Repeat the level right before the U.S. session? Game over. They didn't break the low. He grabbed his 50 pips and got on with his day. I'd say he bought a C-Class Mercedes, all tricked out, in one trade. Do you guys see the head and shoulder pattern in here? Acceptable entries are right where he got in here, or the second pullback to form out the W after the outside. You don't always get 3 swipes. This is why the second leg is the better entry. Okay, so spike to the outside, the low is formed. They come back hours later going into the U.S. session and do not break the low of the day. That is a trick for you in your mind that you got the W. Yes, I see the M in there also for the London session. He trades during the day. He goes to school. Okay, he caught this. Right off of there, the perfect setup, right back to the watered-down mayonnaise. The watered-down mayonnaise when the water and the mayonnaise are pinched together. It went back, it showed some resistance, bounced, did not take out the low, and spiked again. Could he have held the trade? Of course. But I'm teaching people to be proficient at gaining 50 pips without fear and without fail. The stop loss is slightly below the low of the day, over here. Simple trade, amazing. Head and shoulders, shoulder, head, shoulder, okay? Shoulder, head, shoulder. This shoulder's a little longer, so it's kind of not really a head and shoulders. But understand, this pattern is a market maker push to the low, repeat the level, do not repeat the level. This right here validates the continued downtrend for everybody else outside of our group. When they come back near the low and they open the spread at that low, people get triggered the wrong way. The trades are taken the wrong way. Okay, does everybody see that? These are a variation on railroad tracks, but there's no entry here because this green is so oversized. Your stop needs to go below the low. You would be chasing that. And I'm not sure if there was a release last night, some type of news release, to create those spikes. There were spikes in USD CHF and GC also. But just understand what's going on here. There's your M. There's your W reversal. There's your spike to the outside low. When they come back, repeat the level, and fail to break it, you're a buyer against the trend. Price is trading below the 200. Everyone and their mother is short. Okay, I had to call my mother and tell her to turn long. Everyone was short based on the normal technicals. I hope you guys see this stuff is starting to clear up. It's awesome. Okay, this was Roger's chart that was attached to his letter. It got out of sync. I'm sorry. Okay, here's the M formation high going into the U.S. session. There's where you got the setup. There's the pins to the top side, second leg M, lights out. Okay, those are the ones I chose. There were hundreds of good stories last night. Fred posted in here that when I took the snapshot of this, he was up 400 pips. I think he ended up over 800 pips. That's absolutely amazing. I don't even know what Asubio did. Right around here, look in the chart back up to around 5:04, 5:03 p.m. Fred posted, hey, Steve, up 820 pips on the pound dollar, just hit the water. Fantastic. Absolutely exciting stuff. Okay, we're going to get through some of the charts. I hope you guys are getting this. I got a lot of emails. I did not get to everybody last night. I deeply apologize, but I will. I asked him to post some of the better homework in the folder for the room. I don't know where that is. I'm not familiar with the software, but it's in there. The pods had an exceptional piece of work as posted. And I want to say, was it Kelly? Send me a fantastic one that's in there. Anyway, either way, they're both in there. And I want you guys to have a look, compare your homework to that homework. If you did not get that type of markup on your chart, go back and do it again. Okay? And resubmit it to me and say, this is the better one, Steve. I'd rather you look at this one, and I'll ignore the other one. All right? Take it easy on me, though. I got over 500 emails still. I'm very, very happy for you guys that you're getting it. I couldn't be more pleased right now with all the happiness and success that's going on out there and how well people are doing. This is fantastic. Okay, I want to do some housekeeping stuff before I move on. The times. Some people are still having issues with the session times. Okay, how am I going to fix that? I'll give you the times one more time. Okay? Here they are. Depending on the dealer, the high and low will reset between 5, 6, or 7. Why the variation, Steve? Depending on the dealer, his server might be in GMT plus 1, GMT plus 2, or GMT minus 1. That's the variation. I can tell you that MB Trading absolutely destroys all my indicators. It moves the box over in like the middle of the afternoon and puts the red box on someone else's chart. It's absolutely crazy. It doesn't work right. Okay, for that, you're going to need some other technical issue, support to get that worked out. You know what's easier? Go with Compass and go to FXDD or change brokers. That's easier. Okay, from 5 o'clock, the high and low reset 5, 6, or 7. When that high and low resets, the blue box should touch the white tracer on the left-hand margin of the screen. The tracer is the day mark. The tracer going straight up and down is the day break mark when they reset the high and low. If your board is not resetting where that tracer is, you're out of sync. Okay? The box should stop painting at around 1 a.m. But Steve, you said the session's over at 3. I did say that. But to give you an idea, they don't move the same time every single day. If I told you they move every day at 3:30, just take the trade, this class will be over in 5 minutes. It's not that simple. They are smarter than that. Some days they move at 1 a.m., some days they move at 4 a.m., some days they hold it all the way to the U.S. session and then move. Continued consolidation. It's like this. It's like a rotation. About a month ago, when I was in Las Vegas, a lot of activity was happening during the Asian session. Well, that's usually the accumulation phase of the market. I told you that, but here's what's going on. They rotate activity to keep you from figuring it out. So one day the Asian guy might say, hey, look, man, I'm sick of accumulating contracts. You guys are having all the fun hitting the stops. This just ain't right. You got to let me have some fun. So the London guy goes, all right, I'll accumulate for a while. Go ahead and make some runs in Asian session. Make some W's and M's. Kill everybody, and I'll come in and just collect the contracts up on either side of the straddle. So now the pattern is shifted to consolidation in the end of the U.S. session afternoon to the aggressive move being seen during the Asian session, WM formations, peak formation, high lows, and making the run. Now the London guy comes on, and normally he's the one that has all the fun. He has to be the consolidation accumulation guy. And then when he does, he passes the torch to the U.S. guy, and the U.S. guy again gets to make the reversal or the continuation. So they change the shifts and the activity at different times during the year. Why? Because we have the 9 to 5 mentality. My father was a 9 to 5 guy, worked very hard, taught me well. A lot of people have the same thing. They grew up with that mentality. Work hard, you'll be rewarded. 9 to 5, put in your hours, be there, be there. That doesn't work for trading. You cannot have the 9 to 5 mentality in trading. Here's why. You show up your computer, you're a 9 to 5 mentality, you're thinking, I'm going to work today no matter what, I'm taking a trade. You might come to the screen and your blue boxes are destroyed. You might come to the screen and it just so happens to be during the hours you chose that the market makers are going to consolidate for this time. But damn it, I'm taking a trade today. I'm here, I clocked in, I'm in front of my desk, I'm taking a trade. Now you take something that doesn't look like anything I've ever talked about in my classes because you were there, you're taking a trade. Then you send it to me and you say, Steve, your shit don't work, what's wrong with you? What happens is they change the pattern, timings, but the pattern does not change. Okay, I'll say it again. They change the pattern timings, but the pattern does not change. They do it at different times during the day. They use different news releases to complete the pattern and the triggers. Okay, so am I telling you to trade the news? No. But I'm telling you to understand that the news will complete the cycle and help you get level 3 or identify the level you are on and complete the cycle to get you where you need to be to take one of our setups into the trading zone. Okay? All right, someone asked me, well, a lot of people ask me, will this system ever fail? They're just so excited, they just don't want this to ever fail. They can't believe they have to hurry up and trade every single day before this fails. Well, I can tell you that this will never fail. Why? Think about this for a minute. There's a high and there's a low. As long as I can go back in the charts for years and years and years, there's always a high, there's always a low. There's always a high in the equity market. There's always a low in the equity market. There's always a high in the futures market. There's always a low in the futures market. As long as there is a high and a low, and people behave the same at these price points, the traps will be made, and the behaviors will stay the same. We can identify these now and pick the tops and the bottoms in a market, which is said as a rule out there that is absolutely impossible to do. And I can tell you that almost all of you are doing it now. You're picking the top and bottom within a few pips of a market. Did you ever think that was possible? It's amazing. Okay, another question, or a lot of questions I had is, do I work for Compass now? No. Compass and I are working together. This is a strategic alliance to bring a lot of people this information. Okay, I think very highly of the people at Compass, but I work for myself. Compass works for themselves. Does that mean that down the road we won't do something? I don't know right now. Right now, I just want to deliver the best possible class to you guys and go on Christmas break and go skiing like I had planned. Okay? I think the world of these people, I'm very happy that they were able to get my message out to so many people. It's fantastic, and I'm hoping I'm making a difference in your life. I don't know what the future holds, but I just want you to know that as of right now, this was a one-time agreement, and we're just hanging out together and having a great time. And I hope you guys are enjoying the class. I'm doing my best to give you the best possible product on the web right now. Okay, let's get into the slides. Let's get through this stuff. This is the day right now that everything should click for you. If that news chart didn't do it, if seeing other people's success doesn't do this and get you pumped up, you are dead. I can't help you. All right? You need to get CPR or something. You got to be excited about this stuff. I'm losing my mind, and I've been doing it for years. All right, we're going to continue on where we left off. A quick review. This is what you should know right now. You should know that the Asian range less than 50 pips is ideal. Market makers set the initial high and low. They come out of that box. They hit it in 3 moves. 1, 2, 3. Boom. That's the move. When you see that, that is part of the confluence of events. That move should be 25 to 50 pips higher than the range itself. Why? People put their stops 25 to 50 pips. They go and get them. Okay? That's why that move is 25 to 50 pips. They should pull away aggressively, go into consolidation 30 to 90 minutes in that zone. That is the trade zone. You are a buyer and seller in that zone against the prevailing market sentiment. Okay? They quickly pull away, creating level 1. They quickly come near the level, but do not break it. That validates the trade, leg 2. Hit the stops, drop, or rise. Hit the stops, drop, or rise, depending on what cycle we're on. They will hit the stops opposite of the trend when the brakes are applied. That is a clue that you are in level 3. Why? They push the candle straight down. On a 5-minute chart, it looks like a continuation. Because what happens when they push that 15-minute candle down? You might get 2 red closes if we're going down and 2 green closes on a 5-minute chart in a continuation. But then what do? The last few minutes of the candle, they snatch the market away and paint that 15-minute candle with a wick. They create the railroad tracks or they create the wick. Understand that this is on purpose. Some of you may or may not know this. This is very important, is that there's a thing called backside of the hour. Okay? Write this down if you're not writing. If you haven't written anything down this week, write this down. Backside of the hour. What the hell are you talking about? Backside of the hour is that they make an aggressive move on the 1-hour candle within the last 10 to 15 minutes of that candle. Really? Yes, because it paints the chart. So what do? They might push a 1 hour candle straight down red, and then in the last 15 minutes, turn that red candle inside out to green, close it as a hammer, and create the reversal, but they left it down there for 45 minutes or 50 minutes, and they gave people 10 5-minute closes the other way. Crazy, right? By design. Backside of the hour, it happens on the 4 hour also. Okay, 3 hours and 50 minutes in, they make the move. Think about this. 3 hours and 50 minutes in, 50 minutes in, they close, they continue the pattern on the 4 hour and the 1 hour. Backside of the hour. Backside of the 4 hour. They paint the candle to show the reversal after they already trapped everybody for 45 minutes or 3 hours and 45 minutes. Okay, I hope you guys understand what I'm talking about. That is absolutely crazy amazing. That you know you can expect a pattern to develop on the backside of the hour. So why are you saying this, Steve? What should I worry about this for? Here's why. If you're about to take a trade and you're not sure, and it's 350 on the 4 hour or it's 50 minutes in, wait 10 more minutes. Wait 10 more minutes. Why? Because one of two things can occur. They can actually make the price. Let's say it's a short situation, it's a red candle, and you're seeing a little wick. At 5 minutes till the hour, they might push that down one more time to show something that's not real, to show the downtrend continuation, to show the uptrend continuation. And then immediately following that 5 minutes on the open of the next candle, the railroad tracks will form. Think about railroad tracks on a 1 hour chart. How are they formed? They must push the candle down and close it on the back side of the hour at the extreme low. Right? A railroad track is, the beginning part of a railroad track is a straight red candle or a straight green candle. That closes right on top of the high or low. How do they do that? Well, if price is not running, they do it in spurts and they close it on the back side of the hour. So if you understand the back side of the hour and you're right on top of that time point, give yourself the 5 minutes and see how it behaves. Because you will know the truth then of which way it's really going to go. They'll either pull it all the way back up in the last 5 minutes and make the wick visible, or they will close at the very low, and then on the open of the next candle, the reversal will be imminent. It will form out the railroad tracks. They will snatch the lower level shorts or snatch the higher level longs, shift the market away from those people. Okay? You guys understand? Good, good, good. All right, don't forget about this. Write this down. Good stuff. All right, some people are saying you're only seeing the one chart. Yes, that's it. The high-low chart's what's up there. I'm talking about other stuff that I wanted to make sure I cleaned up and housekeeping, okay? All right, let's get to the slides. The high and low of the day. Well, I've been talking about the high and low of the day since I got here. But let's put it into some terms to help you understand it a little clearer for some of you that are confused. Okay? If you haven't figured it out yet, let me figure it out for you. The high and low of the day is everything in this business. It's everything. Does this apply to other markets? I don't know for sure, but I can tell you that the high and low in the day in this business is everything in Forex. If you can identify the high and low of the day without fail, you will be successful. Okay, so let's talk about the high and low of the day. I implore you to take notes. If you haven't taken notes all week and you're confused, that's probably why. I understand that there's some sync issues with the recording. How about this? How about listen to the recording and close your eyes or shut your screen? And just listen to what I'm talking about and make your own notes off of my voice. You don't need those slides. You have to make this stuff, has to become conceptualized in your mind. Okay? I know there's technical glitches. I've never done this stuff before. For all I know, it could be my computer. But I can't fix that for you right now. But I want you to get this. How am I going to get this, Steve? Close your screen, get out a pad, listen to me talk, and take notes. The beauty is I talk 100 miles an hour. You can stop and start me in there. Okay? You can give me a Diet Coke and get me going, or you can take it away from me and slow me down. That's the beauty of the recordings. I understand the slides don't line up. Make your own slides. Make your own notes. This will help you conceptualize it. Okay? Hope that helps you guys. All right, let's get to the slides. If you haven't noticed, I'm jacked up today. I'm very excited. All right. The high and low of the day. The entire business rests on these two price points. Certain behaviors at these levels. Well, I covered most of them. Very aggressive. Pull the market away quickly. Go back at the stops in both directions. What I'm going to show you is how to anticipate the high and low. I said this one more time. Market makers act volatile at these price points to confuse the hell out of you and get you to commit the wrong way. Stop thinking like a retail trader and start thinking like a market maker. Start thinking like these guys. Change your mentality from the other side of the feed, and this will come to you. The high and low are extended quickly to trigger all the stops and create panic in the marketplace. The market makers will cut the initial high and low in 3 moves or swipes to change your market psychology. On that chart from July 21st, without seeing the rest of it, if you saw 3 big fat green candles in your old life, wouldn't you think that was a buy? They induce you to change your direction and recommit your funds in the new wrong direction. Right? They're showing you their hand. They're going 3 candles up. That's price rising for 45 minutes. On a 5-minute chart, there's a gazillion candles green on that thing. Straight up, right? You get excited. You see that it's trading above the moving averages. Every textbook you ever read tells you, I need to be a buyer in an uptrend. What the hell is wrong with I got to buy. I can't sell now. This guy's crazy. Right? That's what you say. And then what do? They apply the brakes when you get in after 3 times, the absolute worst possible place, snatch the market away from you, you are now stuck. Okay? They go into consolidation to validate the long positions, to make everybody think, oh, this is the resting part of the market. Market's in congestion. I've heard so many different things. The market's in congestion. The market has a chest cold right now, and it's in congestion. Okay, that is not what's going on. They are building positions near the high and near the low of the day to get traders to commit the wrong way. And they do. Because they think the market has a chest cold, they're buyers. Okay, what can I expect at this price area or this zone? The candles will show wicks. The candles will show wicks against the trend. Or in line with the trend. I don't know the right way to say that. The candles, let's say it's an up situation. I'm going to draw for you in a minute. Don't get excited. They break to the upside. And then what happens? You see wicks on the top side. Well, that doesn't make any sense. As if price was rejected off of the high or off of that price point. It pulls back. They do it again. Right? The spread will open. I said this, and I drew it for you. It was a horrible drawing. I agree. But understand what I was trying to convey to you. The spread will open. The areas will be worked for 30 to 90 minutes. Most of the time, except for railroad tracks, it's longer. Roger showed us one that took 2 hours and 45 minutes to develop. That's awesome. If you can't make up your mind in 2 hours and 45 minutes, I can't help you. But you should not be chasing and clicking them out within a minute or two when the pattern forms, when you think you see something. You usually have a minimum of 15 minutes to make up your mind. Why? Because the railroad tracks mess up this whole theory. It goes up, they hit it, and they pull right back. We have to account for the railroad tracks. So the 30 to 90 minute messes that up. I'm sorry, railroad tracks mess up 30 to 90 minutes. So what happens is they hit the high, pull back in 15, then they go into maybe half a Batman. They may or may not repeat the level. So a lot of people get aggressive and grab the railroad tracks. I know Rick is a master at grabbing those, and he'll take 25, 30 pips off because I showed you they come back to hit the stops. So when they come back to hit the stops in both directions and make the second leg formation, he'll grab it again. And I'm talking about a guy trading 50 lots, so he'll grab 20, 25 pips with 50 lots, then he'll throw 50 lots on and beat the hell out of the run itself. Because here's what happens. He's not so sure on the first grab, you don't know if it's going to come back or not. Sometimes they paint railroad tracks and they're gone. Sometimes they paint railroad tracks and come back to the second leg. So he doesn't gamble on the first leg, he takes what is offered to him. They make the pullback between 30 and 50 pips. Remember I told you 25 to 50 pips off of the lower high to build positions. They pull quickly away from those zones. Why? They got to leave people trapped and down big. The more you are down, the less likely you are to click your mouse and get out. Right? If you're down 2 or 3 pips with one lot, 30, 40, 50 bucks, I'll eat it. It's not that big of a deal. You're down 800, 900 bucks. The 9 to 5 mentality tells you that that's what most people make working in 2 weeks. I can't throw that away in the click of a mouse. so you don't click out and you are in the wrong directional move. That's why you let the losses mount and you get upset, and then it gets worse and worse and worse because you're going the wrong way. And when it comes near the second leg, that's your opportunity to clear the board with a -5 or -10. You won't take it because you ain't going to throw away $100. Okay, keep that in mind. Markets will seem fast but not really moving. I covered this yesterday, very important. The market will seem like it's going everywhere. The board will be erratic. Prices are flashing green, red, yellow, neutral, green, blue, purple, orange. They're turning colors like crazy. But then you look at the price and it's not really moving. Because they're opening the spread, your level's holding, depending on which way you're in the trade, and the other side of the trade's moving. Once their goal is achieved, not your goal, their goal. It could be an hour, could be 30 minutes, could be 90 minutes, could be 4 hours. Roger, could be 2 hours and 45 minutes. It's their goal, it's not your goal. When that goal is achieved, one candle starts the profit for us and the knots for everybody else. They shift off of the higher low of the day in one bar, trap the traders that are at those higher level longs, lower level shorts, and you start the run. The run takes 6 to 8 hours into the next session. That is the trend for the session. You should be in the right directional move after that is formed. I want you to learn to deal before the shift bar. You will. It takes time and patience. You will. Can you still get in on the shift bar? Yeah. But your stop's got to be deeper. You're in a little late. I want you to be up big when they make the shift. Okay? That doesn't mean you have to panic and rush and hurry up and pull the trigger. You calmly mark your trade where you're supposed to be getting in. One of the homework assignments coming up. I want you to show me W formations and where you're supposed to get in, and show me where they shift the zone. Sometimes they shift the zone in 2 bars, 30 minutes. They'll shift it, hold, shift it again, 2 red bars or 2 green bars. But just understand, when they break the bar in 2 pieces, that gives you an entry better. I don't want you to get in on the shift of the zone bar. I want you to already be in. So when that zone is shifted, you're up 10, 15 pips already. Right? Like when Roger did. Drawdown was 8 pips, 2 of it being the spread. So his drawdown was 6 pips for probably 5, 10 minutes at the most. Think about how amazing that is. And a lot of you have the same results. I just picked on him because his email was nice and he sent me the chart. Okay, here it is. Trap moves. 1 hour of work. Look what they did. They made the spike to the low right outside the box. They spiked it for 3 more candles. Right? They even threw an extra one in. They broke the shift in 2 pieces. They hit it here, pulled back. You could have entered on the open here. This is the shift bar right here. This is the trap bar right there. That bar pulls away and puts everybody down. Okay? This bar, they shift the zone off of all these price points in here. Does everybody understand that? When they shift the zone, you are now trapped if you're a lower level short seller. Now you start doing all kinds of crazy stuff. Lift your stop, move stuff out of the way, do all kinds of things. Turn on CNN, try to see if there was some kind of news release you weren't aware of, try to see if maybe Bernanke passed away. Quick, honey, I don't know, turn on the TV, I'm going the wrong way. I got 10 friggin' lots on short at the bottom of this red candle, and oh man, I don't know what to do. That's what people do. That's the business. If this resonates with you, I apologize, but it ends here and now. This will not happen to you anymore. You now know better. Okay? So 1 hour of work. Understand, this falls in the 30 to 90 minute parameter. Can it go longer? Yes, it can go longer. Can it go shorter? No. 30 minutes is the minimum. Why? 15 in, 15 out. If they had moved on this candle right here, 15 down, throw the spike, turn green, and gone. 30 minutes. 30 minutes is the minimum amount of time you have to decide. Okay? Remember, this is one of those back-of-the-hour candles. Look at this candle. We all understand that this candle was solid red, straight down. What did they do? Probably in the last few minutes, they whipped it off of the bottom and closed it to look like a spike to the low. But when people see this and they're holding the level down red, what do you think? You think it's a downtrend. You see, man, there's 2 red candles. It's below the averages. That looks like a nice trade to me, short. I'm going to take it. And then, man, if they don't, in the last 10 minutes of the hour, pull that away, close the candle, and then they work it for another 45 minutes and then shift the zone off of the lower level shorts, trap everybody for the cycle, 100 million, 200 million, 500 million, I don't know the number. but it's in there. Some amount of money is in here for them to make this aggressive move, to make it worth their while. That's what happens there, okay? Once the higher low is established, there will be a big pullback, 25 to 50 pips. Think about what just happened. The stops of the weaker traders are all hit in both directions. Then all the patterns and textbook technicals are validated. If you're writing this down, it's fine. I'll slow down a little bit. Those traders are now stuck, or they're watching it run when they were in the right directional move. Why? They hit the stops in both directions. And now you get out, and you've always learned, oh, if you get stopped out, wait, lower your risk, hang out a few minutes, drink a 6, run around the house, try to figure out what the hell just happened. And you watch the trade run because you didn't know any better. Here it is. Here's the anatomy of a W. Okay? This happened just the other day. It was so perfect I had to put it in there. If there was a textbook, this would be on the cover. Okay? Here's what they do. The LOD is established, low of the day. Okay? Look at all the wicks. The wicks start turning from the top side to the downside to trap and pull away, trap and pull away, trap and pull away. Now, they shifted away. They hit the stop of the shorts by moving about 25 to 50 pips off of that number. Anyone that went short here is now stopped out. Right? That's a 50 pip pullback. Most people put their stop somewhere here. Above these candles in the zone. They think it's a down, right? They put their stops in here. Somewhere in here they pull the trigger, their stops are here. All right? The ones that are sneakier, all right, I put my stops right around here. I'm a little smarter than the rest of these idiots, right? I put my stop here. They ain't going to get me with a 20 pip stop. I'll take 50. Guess what? They eat the 50. And if there's more money lying up here for them to get, they'll go get it. So you making a bigger stop is moronic. All you're doing is giving them more money. A bigger stop does not make you a better trader. It makes you a broker trader. All right? No pun there with the broker. Okay, now, they run right back down to form out the second leg. They go, this leg fails to take out the low. That tells you I'm in the right directional move here. I got this, right? But here's what happened. This is a two-pronged thing. This hits the stops of all the people that thought they got the low of the day and went long in here. This hits all the stops of the long holders that took positions here, took positions here, took positions here, and put their stop right below the entry candle. When they come back right there, they come right near the low of the day and don't break it, and then they shift the zone off of the low for the last time, and it is game over. In this example, level 1 happens to be a 30-minute move off of the low and back into consolidation. Remember what I told you, very important. They form the consolidation zones to coincide with support and resistance on the chart from a previous day, week, month, year, season, holiday, whatever. These zones, these consolidation zones, are helping them line their pockets because traders put pending orders on either side of these false support and resistance or man-made market maker support and resistance zones. So what they do is they go up. Doesn't this look like possibly resistance will hold from October 27th at 6 o'clock at 5 in the morning or 2700? I don't know at the time. I think I made that up. All right. You think, drawing a line, look, this lines up with the peak formation here, this lines up here. Let me draw the line all the way over here, somewhere off the screen, and find the support or resistance point that will hold. No. It acts like it's going to hold. And they hold that level for about an hour and 15 minutes. 1, 2, 3, 4, 5. 1 hour and 15 minutes. Steve, that is resistance from October 7th. I differ with you. That will most certainly hold. I'm going to take a short position on the bounce off of that. You also have the 50 confirming, and I'm almost certain that this support will hold and lets everyone turn short here in line with the overall prevailing trend. I've heard those analysts say that like a joke all the time. And then I watch them get triggered and stopped out. And I just say to myself, thank God that I know the right way to trade. And now you guys do too. They immediately break that consolidation zone, hit the stop, price rise, it is gone. You hit your 50 pips or your 100 pips, whatever you were looking for. Okay, that is the anatomy of a W, the LOD. It is, hold that in the mirror, that's the anatomy of the high of the day. You now understand the high and low of the day, perfectly clear, this is what they're doing. Okay? Understand this move is repeated every single day, variations on the theme. Every single day, every different pair, at different times. Will it paint a W like that every day? No. Your job as a trader or hunter is to find those W's that don't fail, to find the M's that don't fail. When you identify those patterns and take second leg, you're going to have the confidence to pull 10 lots, 25 lots, 50 lots, or scale in with 3,700 lots like a Subio does. Because you know where it's going. You know exactly what it's going to do. Man, you think I get this thing figured out with the scanner by now, right? You're going to have to put up with it one more time because I don't know how to change the timing on it. There's probably in there in a clock somewhere. I'm just going to leave it. All right, so tomorrow night at 7 o'clock, it's going to do it. You guys just be ready for it, all right? We can laugh about it. All right, now, this is the anatomy of an M and a W. This is it. Hold this W in the mirror, you got the M. Forget about the moving averages, man-made. Forget about, no offense, Dean, TDI. Forget about RSI. Forget about MACD. It's garbage. Does it help you confirm? Yes, it helps you confirm. But the pattern trumps everything. I took the indicators that were out there to help us make the conversion faster. Because we know how to read this stuff. We've been reading it for years. All it does is give you the confirmation. The pattern, the market maker move, trumps everything that's out there in the world as indicator packages as anything else. Your job is to learn this pattern, learn it well, and look for the high and low of the day when it is set. Look for the path near that high and low, and take a trade with ease and peace. And be in harmony with the market. I've heard harmonic trading, I've heard all these different things. This is actually true harmony in the market. Because you're trading at ease. Right? I always go back to this. Kim said that she was amazed at Rick's calmness. Of course he's going to be calm. He's trading 50 lots with a 2-pip stop, and he's nailing 50, 60, 70 pips. He buys a Toyota every time he clicks the mouse. Wouldn't you be calm and happy too? Think. Trade like a market maker, not a retail trader. Nothing is smarter than you and identifying this pattern. An indicator just indicates. You must be the filter. You must understand this pattern. And if you don't understand that I'm failing you as a teacher, I want you to send me homework and tell me, Steve, I'm lost. What the hell do I have to do to get this? I will help you. That's why you paid me this money. Okay? And if it takes me from now till next October, you're going to get this. Okay? I promise you, it's the simplest thing once you understand it. When I was mentoring, it took me 6 months to get this. Okay? One day I was in the shower, and I just said, that's it. I'm not going to lose any more money. I'm done. And something happened. I had, I don't know, what do they call it, an epiphany or something? That's what I had. I realized what I was doing wrong. It just clicked one day, and I got it. Will it take you 6 months? No, a lot of you are way smarter than me. Some of you took one day and are sending me all these things. Some of you took my sales pitch and sending me $8,000 trades. My hat's off to those guys. It took me 6 months to get it. Okay? And if you're one of those guys that's taking some time, I'm here for you. That's part of it. Okay? That's the part of the ongoing support. Kim promised me today that I will get every one of your email address. You will be added to my list. When I send out trades of the week, charts of the day, any signals, you will be included on that. Okay? When I'm in Orlando, everyone's welcome. If I have to rent, what is it, the Orange Bowl Stadium to fit all of you, we'll rent the stadium. Everyone is welcome as long as I'm around. If market makers kill me, you're on your own. All right? As long as I'm around, you are welcome to anything that I do until you get this. My goal is for you to get it, not for you to hang out with me and be a groupie. Some people just like the company. They come, they're doing great. I go, why the hell are you here? They go, I haven't seen you since 2 classes. I just want to hang out with you. It's really cool. Okay, anyway, this is the anatomy of an M and a W. I hope you guys are getting this. This is it. All right, now let's look at some W's. 3 to the low. Boom, boom, boom. Agent consolidation. 1, 2, 3. There's your hammer. Right? That's a perfect hammer. Come back, second leg. You enter here or here in the second leg. Easy, simple. Trade runs up nicely, little to no drawdown. 1, 2, 3 to the high. Variations on the theme. They cut the high, validate the breakout traders, hold the level for 30 minutes, break, 2 more to the high. Variation on the 1, 2, 3. Is it always going to be 1, 2, 3 and 3 perfect? Of course not. It's not going to be 3 perfect candles to the high. This one took 5. They hit it, hung around for a little while to make people that were going to trade the breakouts to get on. They ran it up. They might have saw a profit. They put the brakes on right at the top for 30 minutes and rolled it over. Gone. If you were a breakout trader, if you thought this was an uptrend because the 513 crossed the 50 above the 200, sorry about your luck. If you took this trade, I apologize. You didn't know me at the time. All right, 1, 2, 3 to the low. There's the entry. There's the exit. Steve, why is that the exit? I don't know about you, but I see 3 levels of rise in there going into the end of the chart, which is probably the U.S. session. I took the boxes off to confuse you, but there it is. 1, 2, 3. 3 bursts to the high. Did the trade go on higher? I don't know. Maybe, maybe not. But you can't get every pip in the market. But I'll be damned if you can't get damn near every pip in the market. You're going to get most of the pips that are out there. But you can't get greedy. Greed kills you in this business. Be happy with a certain float, add contracts. Okay? Let me say this again. Be happy with a certain take, a certain cut, add contracts. Is everybody going to be Fred and Asubio? No. But you can make a hell of a living. And I know the average decent living is 6 figures or better. You can do that. How do you do that? Well, let's say you make $50,000 a year trading single lots. Add a lot, you're at 100. Add 2 lots, 3 lot trader, you're at now $150,000 a year. That's an executive salary, getting up every day, pain in the ass, put your tie on, go down there, do all the office politics, make nice with everybody, hang out by the water cooler, take your little lunch break. You're making more in your pajamas, understanding the market. And simple, no drawdown, no stress, no knots in your stomach. An easy way to make a living when you understand how to trade this stuff. Okay? I hope you guys are seeing this. Here it is. This is an extended consolidation. This is one of the patterns I showed you yesterday. This is a nice variation on the theme. They cut it, consolidated, and then bam, cut it again, and then went into extended consolidation. Why? Maybe it was a Sunday night. Maybe it was a Monday. I don't remember. The contracts weren't building up. So they hold the level longer to validate the shorts, to make people think it's a downtrend. By all textbook definitions, that is a downtrend. So the consolidation near the low of the day builds positions in here. Let me take that back. Builds short positions in here. Okay? Then they make the shift off the zone. You should be in somewhere in this consolidation. This is a little late to the party. You have let's not count that. That's the shift. 1, 2, 3, 4. 1 hour. 1, 2, 3, 4. 2 hours, 15 minutes. There's one close to what Roger came up with. 2 hours and 15 minutes to make up your mind that that's the low of the day. How do you know also? Notice all the pins to the downside. Pins are to the downside. When pins are to the downside, after price is coming from up and it comes down, the pins switch the other way. The needles, the spikes, whatever you want to call them. When the spikes turn the other way, use your head. Market makers are trapping those people at those price points, pulling it away, and sticking them there and going into continued consolidation. Building short contracts in this example. Then all of a sudden, out of nowhere, not when you're ready, when they're ready. How long does that take? I don't know the answer. Sometimes it's 2 bars because they have $1 trillion trapped. Sometimes it takes 15 bars because they only have half a 500 million trapped and they need to wait around for a while. Okay? They wait until the positions are built, till it's worth their while to shift the zone and move the market. That's why sometimes when you take a trade and it doesn't go right away, you think, oh, the system doesn't work or I don't know what the hell's going on. No, it's not you. They hold the levels to build the positions. That's why the market comes to rest and doesn't move, or it doesn't have a chest hold. They're building positions. Okay, here it is. Simply buy or sell third level stop triggers on the second leg of the M or the W. And it is game over for our group. Everyone in here will be successful. Game over. Okay? I showed you the anatomy of a W. I showed you how they work the high and low. Okay, now I'm telling you where to get in. Second leg. Second leg or M or W, period. If you wait, there's no drawdown. The spread, maybe a pip or two. Slippage, that's going to be your drawdown. The trade will move into profit almost immediately. How many times have you taken a trade, you pull it, it shifts about 15, 20 pips the wrong way, and then you're sitting there with knots in your stomach. Then it drifts a little bit further the wrong way, and now you're down 30 pips, and you got bigger knots in your stomach. Okay, if that is happening to you, second leg was made for you. Because if you get upset or nervous when it's going against you, these trades won't go against you very much at all. If you are correct in your assessment, and you're mastering these picks, the trades will turn against you 10 pips or less. And that includes the spread. I know that sounds impossible, but I challenge you to do this and find the second legs and only take the second leg, and this is what will happen to you. Your trades will never have more than 10 pips drawdown. If you could take a trade with less than 10 pips drawdown, don't you think you'd have the stomach to pull 50 lots? Don't you think you'd have the stomach to pull 75 lots on a trade? Of course you would. Because when you become proficient at nailing this, all you do is grab the second leg. It's going to run right up within a few bars, and you will take your 50 lots and have success immediately. Think about how powerful that is. Okay? All right. Always buy or sell the consolidation levels when the market comes to rest. If you are dealing in moving candles, if you're chasing price, you're doing it wrong. If you're getting excited and clicking your mouse, there's a guy, he may or may not be on here, and I'm not picking on him, I love him, he's a fantastic guy. His name is Dave out in California. He's a very, very great guy, good person. I can't say enough good things about him. I want to apologize to him in advance before I make fun of him. When he took my class the first time, we were in class, and Australian spiked, and he goes, "Hurry up, Australians, move in, click in." Very excitable guy. Okay, guess what? He used to go for 20 pips and he used to chase that shit. The last report I got from him is that he has booked about 1,700 pips on his best run, peak formation, high to low, 3-level drop, consolidation, reversal. He's doing fantastic. He took his mentality and he changed, and he became a better trader. I'm very proud of him. Dave, sorry if you got offended. But I want people to understand that the mentality that's out there is exactly what he had. That's how people trade. They get excited when market maker makes these moves, and they chase it and fall for it. And they go for 20 pips. Most people I met say, I go for 20 pips. Why? Well, because 20 pips is easy to grab. No, because you don't know where the hell it's going. That's why you take 20 pips off. Remember I told you early in my presentation that people take some, they do, a lot of people I've met do a 3, I don't know, let's say 3 units. I don't want to say 3 lots, 3 units. They take one off at 20, one off at 50, and trail the stop on the last one. Why would you do that? Because I don't know where the hell this thing is going every day. I can't admit this to everybody, but listen, I really don't know, so take off 20, take off 50, and then we'll just move the stop up on this last one, and maybe it'll run for 100, maybe we'll just get out of break even. That's why people and systems do that. And I'm not ripping on anybody. Please, if this is how you were trading before, I'm not trying to offend you. But this is why these systems are like that. Because people don't know where it's going. And they've been trading for years. I've had emails from you guys in this group that said, Steve, I've been trading for 10 years. I've never seen this shit on the chart. And it's been there the whole time. And you pointed out, oh, my God, I just made $90,000. I'm taking my wife to Hawaii. I've had emails like that. Because a lot of you are good traders and understand. And now, this is the last piece of the puzzle that's been missing in your life. And it's almost like you have that whole puzzle on the table, and there's a hole right in the upper right-hand corner. And Steve walked in, and I had that piece of puzzle in my pocket, and I went in there and snapped it in for you. Now your puzzle is complete, and you see it. Okay, now you get this, and you understand that, oh my God, this is what's been missing in my trading. I've been looking at charts for years. I couldn't figure it out. Now you get it. You guys will be wildly successful in this business because of this teaching. And I couldn't be prouder for all of you, and I'm very, very happy. Okay, let's finish these charts up, take a break. I'm going long. Sorry if you guys need a break. 2 more minutes. All right, here's what I want you to do. I want you to buy or sell peak formations and level 3. That's it. Well, Steve, what about the middle? The middle's for chumps. Don't trade in the middle. Remember I showed you the trading zone is the high of the day within a few pips and the low of the day in a few pips. Well, how does that form? Peak formation high, peak formation low is formed at the London Open or end of the Asian session. The stop hunt. And then if it makes the 3 count and you see 2 pins to the high or 2 pins to the low, 2 pins to the mayonnaise, shark fin, high, hold the mayo, we'll get to those. If you see those trades develop at the extremes of the zone, take them the other way. Don't be afraid to trade the high and the low in both directions against the trends. They do. You're going to sit there on your hands and not take against the trend and watch it correct 50, 60, 70 pips and kick yourself. Because the trend goes both ways. Their trend goes both ways. Our trend, our technical trend, oh, you buy the dips in an uptrend, you buy the whatever, the rallies and the downtrends. BS. You're going to sit there and watch a pair run 150 pips and wait for the rally and not really know if that's the market maker reversal. You know better now. You guys know better. You won't fall for this. Okay. Only trade on closed candles with multiple confirmations. Okay, so what do we got? You buy or sell in consolidation zones when the market's at rest. No stress. Calm. You buy peak formations. You sell peak formations high and low. You only trade on closed candles. Confirm 15-minute closes. Why? Backside of the hour, last couple minutes of the 15-minute candle to form the patterns. And take level 3 reversals. Can level 3 be from yesterday and today? You could have level 1 on Tuesday, level 2 and 3 on Wednesday. Look for the reversal. Yes. Okay? If you wait for those trades, your probability is extremely high in the high 90%. Okay, I know, Steve, that's crazy. That can't be done. Every system I've ever read, 60, 70% at best. And if you get lucky, maybe 72.7%. I'm telling you, there's people in here doing it. Okay? I know some people are still on demo, but they're nailing these signals. There was a woman, she's from Orlando, her and her son, they're fantastic people. She was struggling with the business. She wanted to get this. She was even struggling with my method. I think she had too much baggage. I don't want to mention her name, but I love her. And she finally turned the corner, and I'm so proud of her. She actually made a trade within 2 pips of the high, and her first live trade was like 75 pips. Fantastic stuff. I'm very excited for her. I won't call her out in front of everybody because she might be offended. But I love you and your son. You're great people, and I'm very happy for you guys. All right. We'll get through these last couple slides and I'll break. You know what? I got a big mouth. Let's just break here. Take 5, 7 minutes, grab a soda. I'm going too long without Diet Coke. I'm actually starting to shake and have withdrawals. I'll be back in 7. Thanks. The wonderful accolades in my inbox. It truly is more than any one man deserves in a lifetime. And I thank all of you for the kind words and stuff. I really do. It really means a lot to me. It's part of the reason why I do this. Okay. One of the things Kim mentioned, I want to just cover it briefly. Why don't I know if I'm going to be back? Well, I don't know if I'm going to be back because I want to see if my shit shows up on the internet. If my slides are posted and my voice recordings are posted all over the internet, you guys will have crushed me and it won't happen again. I'll be done. I'll crawl back into my cave and go back from the rock I came out from under, and that's it. That's why I don't know what I'm doing in the future. Okay? So please respect that this is my life's work. You paid for this material. It should be your private information now. If it shows up, it doesn't matter if 99.9% of us do the right thing. It's the one guy that I can't stop. It's the one guy that's stealing the information right now. I can't stop that. But if my life's work ends up posted all over the internet, I'm going to be crushed, and this will not happen again. Okay, anyway, enough said. You guys heard this from Kim. I just wanted you to know my stance on it. That's my stance on it. Okay, so let's pick up right where we left off on the slides. Okay, how to take positions with ease without fear. How to take big lots. Sell upward stop hunts. What the hell are you talking about? I'm going to draw it for you. Buy downward stop hunts. Only after the market consolidates, when the signals appear, the confluence of things coming together we've been talking about. Always be prepared for one more move towards the stops. Most of the time the W is enough, but as I showed you in that chart, they make an extra leg. Why? The timings, perhaps the London Open comes together after they consolidated for a long period of time, they wanted one more swipe at it. If they're going to pull the market 100 pips away from an area, Doesn't it make sense to swipe at 25 more pips before they make that reversal? Yes. If the money is there, they will do it. All right, let me pull out my little chalkboard here and do some artistry for you guys. I'm going to mute my mic for a second. Okay, this is what I'm talking about. Let me grab this pencil, blow it up a little bit. Okay, Asian range. Damn, I was proud. It was pretty straight. Okay, they come out of the range, right? 1, 2, 3. This is an upward stop hunt. The prevailing theory is that this is long, right? You sell the upward stop hunts against the prevailing trend. You're a seller in here. When they pull back, they make another pass. That is a sell signal. You sell upward stop hunts against the trend. Okay? Sometimes they do it again. You are selling upward stop hunts against the trend. Okay? Trend is up. We all see that, right? Averages are usually going to be fanned out over here, crossed over. You are a seller. Understand that the first part of the session will usually have the false move. Remember I told you the false moves are made the beginning and end of a session. End of the session here and to about the beginning of the London session. The false move will be made. Okay, so you sell upward stop hunts against the trend. You buy downward stop hunts, the other one was straighter. You buy downward stop hunts against the trend. Right? Market is showing down, you're a buyer. They make the second pass, you're a buyer. Always be prepared for one more move towards the stops. Okay? They might go into consolidation. This might be extended into the next day, right? Your day line's here, just like the drawing I showed you. Then what happened? They came out at London, hit it again, and then they reversed. Okay? Always be prepared for one more move towards the stops. I'm going to give you the stop loss properties in a minute. But always be prepared for the extra swipe at the stops. They could do a three-legged swipe. Right? This would be a bigger W. One of the questions I saw, someone was still confused, was the M and W, second leg. Okay? If you don't know penmanship, this is not the second leg. This is. Okay? On a W. This is not the second leg. All right? This is. W's are the reversal from a downtrend to an up. M's are the reversal from an uptrend to a down. Sorry. Okay, does everybody understand that? Second leg formation, downward stop hunts against the trend. You buy downward stop hunts against the trend. You sell upward stop hunts against the trend. This slide here. Okay, I hope you're taking notes. When the signals appear, what's the signal? 25 to 50 pips higher than the zone. Spikes to the downside, railroad tracks, hammers, half a Batman, extended consolidation at that zone. Remember the signals? All that stuff starting to come together. Always be prepared for one more move towards the stops. Okay? If they hit the stops high, you're a seller. If they hit the stops high, you're a seller. If they hit the stops low, you're a buyer. What is the difference between a stop hunt and a regular trend run? Look at it. On the candles on the chart, a stop hunt looks like it fell off a cliff. It's 2 or 3 candles straight down. A trend is 25, 30 candles that runs for hours and hours and hours. That's the difference. When it looks like it fell off a cliff aggressively, the fast move, that is the stop hunt. Okay? Those candles end in spikes, and there'll be 3 pulses, 3 bursts towards the lower, towards the high. Because we're stupid, it takes us 3 times to change our mind. So they go, you didn't change your mind yet? Here's one more time. Oh, you didn't change it yet? Here's the last time. Change your mind. Okay, now you think we're going short? Thank you. Now we'll go the other way. Okay, if they hit the stops low, you're a buyer. If they hit the stops high, you're a seller. Simple. It's an oversimplification, but that is about that simple. Okay, how do we manage the stop loss levels? Market makers trigger your stops in 25 to 50 pip increments depending on the pair. Okay, I can tell you that pound yen is about a 75 pip move. to trigger the stops. Because people know it's volatile and they try to outsmart it, and they use 75 to 100 pip stops on that pair. That is ludicrous. Don't do it. Okay. If your stops are triggered, do not go on vacation. I've heard this, and I've seen it in textbooks, and there's an institution that teaches it. First of all, if I get stopped out, you do not want to be on vacation with me. All right? You think I'm going to order martinis and be in a good mood? I'm going to be sitting there with a pissy face on in my lounge chair by the pool all day pissed off. No one likes to lose. Okay? I've actually read this that says if you get stopped out, take a break, go on vacation, reevaluate your life, commit suicide, hang yourself. I don't know what people do when they get stopped out. We don't get stopped out in our group, and when we do, we make it back. Okay, here's the deal. When you get stopped out, understand that you possibly didn't understand the zone where it was at. And understand that sometimes you can be dead right, but the volume didn't accumulate properly, and they got to hit it again. It's not your fault. Okay, if your stops are triggered, don't panic. Simply buy or sell at the next level strike zone and continue trading. What the hell are you talking about, next level strike zone? This ain't a baseball game. The strike zone is where these confluences come together and we strike. Okay? So what happens? You sell, you see 3 swipes to the low, you're a seller. I'm sorry, 3 swipes to the low, you're a buyer. It settles in, it looks like a second leg formation, you take the trade, bam, they hit you, they hit your stops. What just happened? It wasn't set up to where the contracts were straddled on either side. Most people tell you, stay on the side, take a break, don't trade, lower your risk. That's not what we do. We look for the next zone 25 to 50 pips lower, and we trade. Profit will be realized. Okay, here's an example. 3 swipes to the low. This has no indicators on it. Market makers hit the stops, show reversal. This could look like an extended consolidation, inverted half of Batman, back towards the high, right? Well, what do? Right from here to the low is exactly 25 pips. So what happened? This is Australian USD, by the way. The stop triggers are about 25 pips in that pair. 25 to 30 in euro, 25 to 30 in Canadian, 50 in pound, 50 to 60 in GBP CHF, USD CHF 25 to 30. Those are the stop trigger levels. Okay? Now, here's the deal. Instead of going on vacation, you wait for a 25 pip drop when they stop triggering the low, and you go again. And then look what happens. Price rises 75 pips off the second stop hunt. Okay? Market makers saw the contracts down there. This business is about money. They go, well, what the hell? They're laying there. There's like 500 million right there. Move it 25 more pips and just get it. Okay, I'll just go down there and get it. They hit the stops. They drop to the next level, go back into consolidation. They build more shorts against the trend. Makes more money for them when they reverse. Trade the next zone, the next level drop, 25 to 50 pips. Don't trade on top of your trade that gets stopped out. That's stupid. If you get stopped out 25 pips, unless the signal is absolutely crystal clear, don't get back in until they make the next level drop zone. If they cut the low and start dropping, wait. They're going to settle in again. Where, Steve? 25 to 50 pips lower. Why? Every single textbook on every single bookshelf tells you to use a 25 to 50 pip stop. So they go and trigger the incremental 25 to 50 pips to clean out those stops. Think the opposite of what everyone else does. Oh, 25 pip stop, one lot, that's 250. I can afford to lose that. It's 2.5% drawdown in my account. You think they don't know what that book says? You think they have no idea that they're publishing crap that says use a 25 to 30 pip stop, you don't want to lose too much, you might go be pissy on vacation? They know that that stuff's written in there. So what they do is they trigger the stops in exactly those levels where everybody puts them. Even the guy that thinks he's smarter that uses a 50 pip stop or a 60 pip stop is just throwing away more money because on that particular pair, they will trigger those stops. So then what happens? People go, well, 50 wasn't working. You know what? I missed by about 5 pips. I could have went 70 and been safe. Now all of a sudden, you're never going to be a bigger lot trader because how the hell can you risk 75 pips stop with 50 lots on. It'll bust your account if you're wrong. You are guessing at this point. We are not in the guessing business. Okay? I want you to understand how to identify the high and low, and when you're wrong, you wait for the next level strike zone, 25 to 50 pips lower, depending on the pair, profit will be realized. Okay, that's one example. Here is a live example that actually happened. This is EJ back in the summer of June. Market makers hit 3 swipes right out of the box. Went into consolidation for 1 hour. It looked good for a long. You had the outside hammer, spiked the low, came right back above. The candle closed, it looked pretty nice. Guess what they did? They didn't have what they needed. They saw a little bit of money laying right there. They couldn't help themselves. They extended it. I swear to you, go measure it, 50 pips to the pip, to the next level. They spiked to the outside again, and if you notice, that second stop hunt was 3 more pushes to the low. So you got 1, 2, 3, boom, 1, 2, 3. Isn't that funny? 3 bursts to the low. What happened? They needed people to turn short, and they didn't. So they showed them again 3 more times and had them turn low. They then quickly threw the outside hammer and consolidated for 45 minutes in the second strike zone. They took this from here to here, exactly 50 pips. Most of you would have went on vacation and missed a 275 pip run with 3 levels of rise, and you would have been standing on the side pissed off at yourself. You didn't take this. Then they make the beautiful last candle, spike to the high right at the U.S. session, come back second leg, railroad tracks, big spikes here, railroad tracks here, sell here or here, and look at that, right back into the range. They hit the 50% fib of the entire move by the end of the day. Does everyone see how simple that is? When you see it, if someone points it out to you, it's a joke. But understand that the trend is down. They made 3 swipes to the low right out of the box. They consolidated for 1 hour. They go, man, the London session's coming. What do I got here? You know what? We still got a lot of people that are long. So what do? Well, let's drop 3 more times, 50 pips. Let's get all the stop losses that are aggregated down in here because these guys think they're smarter than us. Let's drop down 50 pips to the pip. Let's clean those guys out. When we drop 100 pips the wrong way, they're going to know that we're serious about shorts, and they're going to think it's a downtrend. And they're going to sell at the worst possible point because they go 1, 2, 3, sell, consolidate, 1, 2, 3, gotcha. You didn't think we were serious? We're serious. It's short. Everyone turns short by reading the chart. They go into consolidation for 1 hour, and they make a 275 pip run after what is known as an extended stop hunt. And there's 3 levels of rise in that chart. Go back and look at this chart. It is June the 1st. This is exactly how it played out. Measure the 2 consolidation strikes. Okay, they came out of the chart, bam, hit it in 3 moves, consolidated, didn't have what they needed. They hit it again, and on the second swipe, or the second time they hit it, their goals were achieved. So you should enter this position without fear. I told you there's 3 levels of rise, right? Well, couldn't this be 2 and 3? If you count the 3 levels, or if you just keep trading, eventually you'll stumble onto level 3 and make some money. Okay, there are 3 levels of drop or rise. If you're going the wrong way, you will only be wrong 3 times. If a pair moves 150 pips ADR, simply buy or sell at 50 pip increments when they trigger the stops. You're going to stumble into the money. Eventually you'll fall on level 3, and you'll be like, holy shit, I just fell on level 3, there's the money. My last bullet is very important. This is not a real strategy. Okay? Understand that that's what happened. Someone's saying it happened last night in Euro CHF. Thank you, Adam. Yes. What happened? They made a nice formation. It looked like it was going to roll over. The contracts weren't laid out right for them. It's about the money. If you understand it's about the money, they can move it 25 to 50 pips more. Why? Because they got to go get the money. That's their job. If your job is to hit the stops and take the money, are you going to leave 500 million sitting outside the range? No, you're going to go get it. That's why you're paid. You're bonused out on that stuff. You know what? It's Christmas time. Hey, there's 500 million laying there. If I hit that, I get a 1% bonus. You think I'm going to leave it laying there? No, you're not going to leave it laying there. You're going to go get it. Okay, people are reporting to me that it moved about 23 to 25 pips. Look at that chart. That's the example of exactly what I just showed you. Happens all the time. Okay, that's why when I tell you in my presentation, how many times have you had your stop triggered only to watch it come back and go the right way? What happens is, as an inexperienced or previous to this training trader, you see that happen a couple times, and what do you think? I just won't use a stop loss. It comes back all the damn time. I won't use a stop loss. That is absolute suicide, because you will get your stops. You will get your margin triggered. You will get called out eventually, because one time you're going to be in the wrong directional move, thinking it's 3 swipes at the low or high, and it's actually 3 levels of drop or rise, and it's going to be a 275 pip run, and you're going to get killed. The trick here is to not get your stop loss triggered. Understanding where the stops go properly and how to manage them is what I'm telling you now, this section. Understanding that you don't stop trading when your stop loss is triggered like every other textbook tells you to do. You come back in the next level strike zone or next level drop zone and trade again. Okay? I hope you understand that. It's very important. Do not chase 3 levels and just keep pulling the trigger. That's not what I'm telling you. You wait for the next level strike zone, outside bar, wherever the signal appears the second time. If you're wrong, you do it again. Think about this. I'm telling you, use a 10 to 15 pip stop. If you are wrong twice, that is negative 30. When you hit the next one for 50 pips, you will end the day in profit. Okay? You will end the day in profit. It's not having the fear. It's understanding the market. Before, when you got stopped out, you were like, holy shit, I don't know which way it's going. I know some guys that guess on either side of the Asian channel. When it breaks high, they take it. When it breaks low, they take it. When it breaks high, they take it again. When it breaks low, they take it again. Just like the strategy up here. Eventually, they're going to stumble into the money. But that is not good for your balance. What I want you to do, your mental balance and your account balance, what I want you to do is identify the high and low. And if you are wrong, don't take a trade right on top of that trade. Wait for the next level trigger, 25 to 50 pips. Do the measurements. It happens all the time. You know what also happens? Dean's TDI will grab the divergence in that. Sometimes there'll be divergence on that. It's absolutely amazing. What will happen is the volatility band, I'll talk about this, the first swipes at the high or low will break outside the band, and the second swipe to the high or low, the 25 to 50 pip higher, will be contained by the band itself. And that will help you see the divergence, and that will also show you that this is the second swipe at the high or low, and this looks good now. I'm going to show you examples, okay? Once the trade is on, okay, I'm going to tell you 2 stop losses to use. Once the trade is on, a stop loss level of 23 pips below the low of the day or above the high of the day should be used. This is absolutely the safest. This is for all you guys that get overexcited, that can't wait for the second leg, that have to trade railroad tracks, that lose your mind. This stop is for you. Okay? Why? Because when the second leg comes back, they usually throw the needle below the previous low or above the previous high about 10 or 15 pips. If you add the spread in there, you're going to have a near miss. Okay? I don't want you to be a near miss trader. But you guys don't listen to me anyway. I told you not to trade the first day, and I got like 5,000 emails of trades. So since you're not going to listen to me, I had to write this into my class. So here, 23 pips above or below for the guys that take the first leg entry. In order to trade multiple contracts and be a 50-lot trader, or to be a 25-lot trader, this is the better setup. Little to no drawdown on second leg entries must be mastered. Second leg trades can use a stop loss of 7 to 10 pips above or below the high and low of the day. Why? Because the second leg after the stop is triggered, there won't be another stop loss hunt. There won't be another stop hunt. Market makers won't make another move at the stops. Do they once in a while? Yeah, you'll dump those trades. You'll lose them. But if you take the spread, 7 to 10 pips above or below, and if you start dealing close to the low, you're talking about a total of 17 to 20 pips. if you get stopped out, the next trade will be profitable. You'll be plus 30 for the cycle. Pairs that have bigger spreads need to include the spread in there. Okay, so like let's say you're trading something with six pips. Let's say 7 and 6, 13, 14, that's reasonable. Trust me on this, the better bullet point is number 2. But because you guys get excited and you don't listen, if you're taking first leg formations only and you're just getting excited and pulling trigger, like just clicking the mouse between your legs, upside down, hang from the ceiling, then just use the first stop loss. Okay? I'd rather use the second and become a master at the second, but like I said, you don't listen anyway. So just do whatever works for you. Okay? If the first one works, that's okay. As long as you're profitable and successful. Here's the deal. I have to include stop losses. I have to. I have to teach you how to use them. But the goal here is to not even have them as an issue. Okay, I can tell you, we read Roger's letter, 8 pips drawdown. Was his stop loss an issue? Absolutely not. He had one in place. He put it right above the 200, but it wasn't an issue. Did my friend from New York, I almost said his name. I guess I'll say his name. Is he in here? Let me see. I don't even see him in here. All right. Abo from New York that sent me the Toyota trade or the C-Class Mercedes trade, he uses stop losses. Did they get hit? No. Why? Because he has good chart vision. He's been doing my method for a little while, and he sees it almost like I taught him as my son or something. It's amazing. He has great chart vision. Does that happen to everybody? No. Some people get this like crazy. It just gets in their bones and they kill it. I can tell you that that kid from New York has done more homework than anybody I've ever taught, including me. He did more homework than I did when I was getting trained. He sends me homework like in the afternoon, the evening. I don't know when this guy sleeps, man. He sends me 15, 20 charts at a pop. He texts me charts from his phone. I'm like, oh my God, this guy's amazing. And guess what? He gets it like nobody. This guy can pull the trigger on 100 lots and nail his take profit on the second leg with little to no drawdown because he does the homework and he has good chart vision. And I asked him, where did this chart vision come from? He said, Steve, I do the homework, man. That's where the chart vision came from. So if that doesn't convince you that homework is the key, okay, back about the stops. I've said this, but understand that if you have a good grasp on what the hell I'm talking about or my method, you're rarely going to be wrong in your trades. I have students sending me emails that they hit 8 out of 8, 9 out of 10, 15 out of 15 trades in a row without dumping the trade. That's absolutely incredible. Think about that. To not be wrong in your assessments. You become highly selective, take second leg M or W, you're not going to be wrong in your trades. It's in the chart. It's there all the time. A stop of 3 times in a row is very unlikely because of the levels. So you're not going to be wrong 3 times in a row. You're going to be wrong 2 times. On the 3rd time, profit will be realized if you count the levels and see where you are in the cycle. Once this is mastered, you need to ramp up your contract sizes to maximize your gain. I'm working on Dick Schmidt out in California. I hope he doesn't mind me mentioning him. He's nailing down about $1,000 or so a day, trading one lot. He's making 100 pips a day. That's $20,000 a month. That's $250,000 a year trading one lot. Dick, if you're listening, ramp up, buddy. You're killing this thing. I want to see you make $500,000, $600,000, $700,000 a year. It's so obtainable. You're right there. You're one of those guys that are absolutely knocking this stuff down since we got together, and I want to see you really knock it down. Anyway, I'm not picking on you. You're doing fantastic. I'm very proud of your success. Okay. Market makers create sentiment and act against it. They use the news and rumor to take your money. What do you mean? Someone mentioned yesterday about Greece falling apart. You remember all that stuff was out? The pattern's in there right when that stuff came out. It was completed. Exactly the way I've drawn it for you since you met me. Exactly the way it's designed to take your money. Okay? They use the news, rumors, stuff on CNN, CNBC. They perpetuate the myth by saying, oh, you shouldn't be long right now because of this or that. It's all BS. They use the news to help them reach their targets. They use the releases, non-farm payroll, FOMC, the other releases to help them reach their targets and complete the pattern. Okay, someone's saying the audio is very loud. A couple of people are saying that. Do me a favor. Turn your speakers down. Because you know that if I go in there and start messing with the settings, it might be over again. Sorry that it got like that, but I don't know what to tell you. Lower your speakers. If I go in there and start horsing around with settings, we might have to reboot again. All right. So they created sentiment in the marketplace. We've heard before. Think about this. When Euro was tanking, and they said, oh, the Eurozone, they might devalue the currency or break it up and go back to the old currencies. It was BS. That didn't happen. They're not going to do that. But surely market makers are using that news to reach their targets and turn against people. How come the Euro came back from that? If that was really true and the economy was unrecoverable over there, why didn't the dollar gain strength and the euro keep tanking? They put the brakes on in reverse, and euro rose for a month or so after that, after they created the sentiment and acted against it. They create something in the market. They show you something that looks like something from a textbook. They show you price below the 50 to 200. They might show you that on a daily 4-hour chart. You think it's a downtrend? You sell into it, they put the brakes on and kill you. That's the business. Understand that. All right. Write these down. In Forex, if you didn't hear me say this, here it is. The fast move is false. Never chase rising or falling currency. That's for amateurs. Here's the money part. Market makers drop the market to buy and accumulate contracts. Market makers raise the price or pump it up to dump it. When price is shooting straight up, they're getting a better place for them to dump it. They will extend the high and low in 3 swipes or moves. Will it be 3 candles? Maybe. In that EJ chart I showed you, it was 3, consolidate 3. Amazing. Remember that 3 is a trick against you. 3 is a trick to mess your psychology up. The trend run is slow and steady. 6, 8, 10 hours right through the U.S. session. Market makers need to book profit. They are traders. They just happen to be trading against you, but they are in fact traders. Market makers need to book profit, so the trend will contain 20 to 25 pip pullbacks and 3 levels of move with corresponding levels of consolidation. I know that's a mouthful, and Judith, don't correct my English and stuff when you mark it up tonight. There's no punctuation in there. Market makers need to book profit also, so the trend move will contain 20 to 25 pip pullbacks. Do you ever wonder why the move, it goes up and comes back down, and then goes a little higher and comes back down? Because there is money at every single price point. They have to book. They have to take money off. They don't have unlimited capital. So they're booking profit along the way. When you get them hit the stops in those little consolidation zones, that's them taking money, relieving the buying and selling pressure to make it light work of the next move. A powerful or extended move is almost always followed by consolidation to bring traders back into the fray, level 3. What happens? 3 levels of rise, 3 days of rise. They hit the high, hit the low. They go into a chop. They're cleaning the board. That's when they make most of their money, right? They pump to dump, and then when they get to that higher price point, they absorb all the contracts. You see it rising for 3 days, the old you, and you say, man, it's an uptrend. You buy at the worst possible point, level 3. They sell to you. Now they are heavy short. The world is heavy long. They drop the price. They chop and hold those levels and act crazy at level 3 because they're hitting the stops in both directions, getting traders to commit the wrong way. And think about what happened if they made a trend run against you, you were going the wrong way. You take some time off. Level 3 is simply the act of getting people to come back into the marketplace. That's why the erratic behavior at level 3. Hitting the stops, collecting the contracts, getting traders to recommit. That's what level 3 is. And a lot of times level 3 becomes level 1. When they hit the stops at a level 3 high, it makes the new peak formation before the reversal. Okay, do you guys get that? Do you see it? Okay. We're going to do some basic technicals after the break, but I'm going to stop with this slide. And since I lost you for 5 minutes, let's do a 10-minute dinner break. I'm going to grab something to eat and, of course, another Diet Coke. You know, I had to tell you, there's some friends of mine in New York. They're actually betting on how many Diet Cokes that I drink in a 4-day session. And I thought it was kind of funny. They told me the over-under is 25. And somebody had me over 25, but I could tell you that I have 2 12-packs in my fridge in my office for this class. And there's just enough left for tomorrow, about 6 or 7. So the over-under is less than 25. Right in at 24. You were close, buddies. But anyway, you guys are hilarious. All right. I'm going to give you some basic technicals to apply to what we've been learning for the last couple days to help you, the stuff that's man-made that's out there to help us see this pattern. Okay? Guessing's a 50-50 shot. We are not in the 50-50 business. We're in the 90% plus business with dead laser accuracy. By mastering this market maker pattern, you can reach your trading goals, whatever they are. Okay? If you live in New York and can't afford your parking, we can fix that. If you live out in California and can't afford your registration, we can fix that. All right, we're going to figure out a way for you to reach your goals, whatever they are. If you want to make 25 pips a day, we're going to do it. If you want to make 2,500 pips a day, we're going to do that. Okay, let's stop here before we go into the technicals. And I'm sorry for the short recording. Let's just, instead of a 15, let's make it a 10. You guys go to the bathroom, eat something, open a window, whatever you need to do to feel good. And we'll go for a couple more hours and wrap it up. All right, I'm going to break. Thank you. If you guys can, in fact, hear me, throw some Y's up there for me. Okay, cool. All right, I just got a text from Susan, who was part of the group. She just took a demo account, her first day trading, is that right, Susan? From 5,000 to 9,700 in one day. Okay, dare I say she made like a 90% gain? Susan, that's absolutely amazing. I'm very, very proud of you. It just shows you when you know what's going on, what can happen. It's crazy, isn't it? Man, I'm excited for you. It's great. Okay. Hopefully you wrote that. All right, the scan view. Some of these profiles that are in there, you don't know what they are. They're in the MT4 set that we have. Okay, there's a scan view. It says 1 hour scan. It's simply a collection of the 1 hour charts. Steve, why do I need a collection of the 1 hour charts? Well, when you start to do your check down, what I want you to do is see where level the pairs are at. What I mentioned in one of my classes, and I forgot to mention here, and I'm going to mention it right now, is that there's a big dance or big coordination of different things going on the currency board that you're not aware of. And that is on purpose. What will happen is let's say, for example, they'll take the commodities pairs and make 3 levels of rise on them, Australian and Canadian. When those pairs get to level 3, they will be choppy. Euro, USD, Australian, I'm sorry, I said Australian, GBP, USD, and CHF will be at possibly level 2. Well, while those pairs are rising towards level 3 and the commodities pairs are holding the level, and they're working level 3 on those pairs, the crosses will be handled. What am I talking about? The pairs, anything crossed with Canadian, Euro CAD, GBP CAD, Australian CAD. Anything crossed with Australian, Euro Australian, GBP Australian, Australian Australian, kidding, Australian Yen. So what happens is different pairs reach level 3 at different times during the cycle or during the week. So that is why you should have a collection of the 1 hour charts. So when Canadian rises to level 3 and goes into a chop for a day, understand that the Canadian crosses are being handled. When USD CHF goes to level 3 and goes into a chop or goes into consolidation and holds, Euro CHF, GBP CHF, Australian CHF are being worked. This is part of the fractional stuff I talked about, which I'm going to cover in detail tomorrow, hopefully. But what they do is they'll bring one pair up to level 3 or multiple pairs up to level 3, work those pairs at level 3, show a choppy chart, trap the traders, work it, while the other two pairs are rising towards level 3 or dropping towards level 3, and then that move handles the crosses at the same time. So you got majors, some holding a level, some moving a level, and others being worked as crosses to get to those levels. It's all this is going on behind the scenes secretly and quietly. It's amazing. Why do you need to know this? What does that do for you? Will this make you a better trader? No. But have you ever taken a euro trade and it doesn't move? And you're like, I'm short euro, but I ain't getting nothing. When that happens, the trade is in euro GBP. So GBP might be moving, GBP USD when I say GBP. The pound might be moving, and euro is not. They're handling the crosses coupled with that pair, euro GBP. What happens is it takes a bar or two for the ripple effect. Let's say we drop euro in a puddle, and it takes a bar or two for that ripple to move euro GBP. That gives you a 15 to 30 minute edge. If you take a short position in euro and it doesn't move, and GBP is moving, hop over to euro GBP and look for an opportunity. That is what I'm talking about with the fractional disparity. Susan doesn't know anything about fractional disparity. She doubled her account. So do you need to know this stuff? No. It's more advanced, and I like to save it towards the end, because if most people don't get it, I won't even cover it. It's not necessary to be successful in this business. But it is for the more advanced people, like a Subio, like people that understand the business in more detail or have been successful already. Those people want to know that's a piece of the puzzle. Okay, when I say handling the crosses, I mean making them move. Okay, so what happens is they'll work a section of majors, and then they'll say, okay, the majors are at level 3, hold them there. Let's jump over tomorrow, and let's work Euro CHF, GBP CHF, GJ. Let's handle the cross pairs. Let's work on those cross pairs. Let's get them to level 3, trap the traders, and then when we get that money back, then we'll take the money, put it back in the majors tomorrow, then we'll move the majors and hold those levels. So what happens is you'll see a combination of pairs doing different things, and then you never understood why it won't move. I shorted euro, I shorted GBP, and it didn't move. Why? Well, they had to do something with euro GBP. They had to do something with anything crossed with euro CHF perhaps. That's why you have different movements in different pairs. Okay, I hope you understand. Is this necessary for me to make a living in this business? No. Will I try to cover it? Absolutely. I don't want to leave anything left uncovered or unturned. I want to cover everything. But the most important thing is the foundation that I'm laying here, where somebody like Susan can take an account with $5,000 and double it in one day. That's the whole point of the system. Is fractional disparity necessary for that? No. Will it help you as you get more advanced? Yes. So we'll see how things play out. We may or may not do it. I may, when I come back in January for the follow-up session, may cover it then. Let's just see how we get through and how people are doing. Okay, the collection of the 1 hour charts, you simply look at a cross combination of those charts to determine what the intraday direction may or may not be, where the peak formation high level or low peak formation is, where you are in the actual market cycle. Man, euro looks like it's coming out of level 2. I expect maybe one more drop in euro before they put the brakes on. You can see the M or W formation on this view, but most of the time the M will look like railroad tracks on the 1 hour. The W will look like railroad tracks on the 1 hour. That's all you're using for it, to help you determine direction. Here it is. Now I want you to notice something sneaky. Since I know how they handle the crosses, I set the pairs up to reflect that. Okay? You have euro-based pairs straight down, GBP pairs straight down, dollar-based, the yen is the trigger. Remember I said the yen is the trigger to move EJ and GJ and AJ. They'll hold yen at the level and move rise euro, rise GBP. This gives you a quick depiction of where you are in the count. Simply blow up each chart and look at it. Do you have to use these pairs lined up like this? No, I don't care. Could you make 2 or 3 of these? Of course. But I want you to be able to take a quick glance at the 1 hour chart and see where you are in the count. See what's going on. Okay? That's what this view is used for. If you want to scan 20 pairs, make 2 sets of 9, make 18. Don't make them so ridiculously small that you can't see them. Okay? That's what this is used for. Okay, market timing. Understanding the market timing is very important. I'm going to tell you now the best times to trade. Okay, the time of day we've covered, but I'm going to cover it again. London Open, last quarter of the box, between 1 and 4 a.m. The time of the week, I'm sorry, let me continue in the times. The U.S. session between 8 and 11. If you guys want to trade in the morning, there's opportunity there. Is it as great as the runs in the London session? No. But you know what? Remember I told you they switched shifts? There was a time, I think midsummer, where consolidation was seen all during the London hours, and it was absolutely smoking during the U.S. session. They shifted the pattern to a different time. All my times are Eastern New York. I said that at the beginning. Understand, all my times are Eastern. Okay. The time of the week. Okay, let me make sure. Some people are still lost. Time of day. Last quarter of the box, about 4 hours into the London session. Between 1 and 4 or 5 a.m., depending on how fanatical you are and how long you want to sit there. Take a break. Come back for the red box, 8 to 11. You're trying to catch the false move towards the end of the session to make the W formation going into the 9:30 equities open. So those are your 2 timings. Okay, or just drink Red Bull and don't move. The time of the week, run the week in reverse, and those are the best times. Write the week down backwards. Thursday going into Friday, Wednesday going into Thursday, Tuesday going into Wednesday, Monday going into Tuesday, Sunday going into Monday. Okay? Write the week backwards. That's the best time. Why? Okay, think about the pattern. Here, I'm going to draw for you. Okay, think about the pattern that I've been drawing since you met me. Where's my little pencil? Okay. All right, it's horrible. I know that's awful, but anyway, listen. Sunday, Monday, Tuesday, midweek reversal Wednesday, Thursday, Friday, end the day. Okay, so now, what happens? The bigger, more aggressive moves are seen Wednesday, Thursday, Friday, midweek reversal. Why? Because just like the intraday pattern, a lot of people don't trade Sunday. Religious reasons or whatever, they don't trade. It takes a couple of days for them to build volume. So what happens is they might make the false move Sunday to the downside, pull back, go into consolidation, and trap the traders at different levels. Sunday going into Monday. Then Monday going into Tuesday, they might make the false move high or low, build more positions, and then make the drop Wednesday, Thursday, Friday. You'll see 3 levels. You might get your 33 trade. You'll have 3 levels for 3 days, and then on Friday you might get your 1, 2, 3 levels of drop intraday. When the bottom forms out, the W, they end the week in consolidation over here. And I know this is a horrible picture. It's not my best work, I agree. This is an F, by the way. Let me erase that, extend it. Friday, okay. So this is where your 33 trade will come in. Now, they will leave the people trapped short coming into Monday and then open with the gap and start the cycle over. Okay? All right, I'm getting some complaints about the sound. Can everyone hear me before I move on? Did I drop off? Okay, cool. All right, good. All right. Whoever that was, reboot, call me later. I don't know what to tell you. All right. So anyway, look. The week in reverse is the best time to trade. Now, did it just explode last Sunday, Monday? Of course. Those guys were trying to finish up vacation. Is it perfect like this all the time? No. But what happens if you run the week in reverse, they're building positions. As the week wears on, they have more volume. The moves need to be more aggressive to shake those guys loose and to get their money. That's what happens. Okay, we've talked about time of year, but I'm going to tell you again. I know you don't listen, but I'm going to tell you anyway. Market makers go on break the first full week in December, which this year happened to be around the 10th. There was like 3 or 4 days non-farm came out. Then they had a full week. That Friday is the last day for those guys. Can they hang around another day or two? Yes. Is it an exact science, Adam? No. It's not an exact science. Can you still get setups? Yeah, Dick said he's trading against the JV and he's killing them. But understand, for the most part, you won't get follow-through. You see a lot of chop. You won't get the levels. When you're learning, it's difficult when it doesn't follow through and do what I said. You start to lose faith in me and you think I'm crazy. I want you to trade at the best possible opportunities to see how powerful what I'm telling you is. So, what I tell everyone to do is to take a break from around mid-December to mid-January. These guys don't come back until the second full week in January. Why? Well, New Year's usually messes up that week. Like it's like the first or second is like on a Tuesday or a Wednesday. Well, we can't work during that week. That's New Year's. So then the following Monday, when the first full week starts, they come back. I'm sorry, after the next week, they come back that Monday, which is about 7 to 10 days into the month, maybe longer, depending on how it breaks up on the calendar. So the only time when Forex doesn't show good follow-through in the market is historically that time. Now, there's other things going on in the world. The economy's crashing. Everyone's losing their home, different things. Possibly this year it might move a little further into the month. But again, I said, look at it every day. If a W is staring you right in the face and it's begging you to take it, and it happens to be December 14th, for God's sakes, take it. That's what I'm teaching you. But if it's not crystal clear and you notice a lot of chop in the charts and crazy erratic behavior, take some time off, okay? Take the month off. You should have a good enough year that December should be a joy. Go to New York, go shopping. California, go to Rodeo Drive. You've earned it. It's been a great year. Let's go to Aspen. I'll meet you over there. Let's take this money that we deserve so much and enjoy it. That's what it's for. It's a tool to enjoy your life. It is not the end-all, be-all. It is a tool to provide things for our family, take care of our children, and to enjoy our life. Okay? So, timing. Some people asking me about the break in August. That's equities bullshit. That's sell in May and go away. That does not happen in Forex. Forex moves throughout the course of the year, including Christmas. Makes me look bad, but for the most part, that's the time when the break should be taken. Okay? News releases. Oh, I forgot another thing about time of week. Holidays and news releases. Let's go holidays, time of year. Anytime there's a U.S. holiday, Labor Day, Memorial Day, 4th of July, most of the time the Asian session will be aggressive and possibly blow out the boxes. Why? They're so freaking selfish that they miss money during the U.S. session. They got to make it up in the Asian session. That's why. What happens is there's no movement during the U.S. session. They will come back in Asia and bust open the boxes and make up for whatever they lost during that session time. It's true. Go back and look. Historically, Asian session will be very aggressive after a 4th of July holiday, Labor Day, Memorial Day, President's Day. Whenever the U.S. equities and Forex market, U.S. dealers are closed, the Asian session will be very aggressive. Okay? News releases. I've covered this a little bit, but I'm going to cover it some more. It's not necessary to trade the news. Just understand where you are in the cycle, and the news is used to complete the cycle. Okay? Do you need to trade news releases like non-farm and FOMC? No, don't trade that garbage. You don't need that crap in your life. I showed you how to take a $5,000 account to $10,000 in one day. Why do you got to trade crap? It's not necessary. Only pick the pristine setups on the best days. That's what I want you to do. Show up every day. If the setup is screaming at you, take it. If it's not, take the day off. Okay, that's how we handle trading. It's very difficult for people because I said earlier about the 9 to 5 mentality, remember? That you show up, you have to take a trade today. That is the wrong work ethic in this business. That will get you killed. Okay? So what I'm saying is, do the fundamentals matter? No. Garbage. The fundamentals are excuses by most of the other traders to explain why the hell the market didn't go what they thought it was going to do. Does that stuff move the market and help them hit their bigger targets? Yes. But I promise you, I said this about the Greece crash, when the pigs meeting was a mess, when FOMC came out on that chart I showed you, the news is used as triggers to complete the pattern. It's all garbage. They let people come out and say what they're going to say. They create a sentiment, I told you, and act against it. When people thought the euro was going to drop, it dropped initially. And then what happened? They put the brakes on when everybody turned short and killed it. And if you go back and look at that day, I'm almost positive there was railroad tracks high and it tanked the pattern exactly as I explained it. When all this stuff started coming out about Greece, it was in there. Go look at the charts. I challenge you to go look at the charts. Send them to me in an email. I'll post them tomorrow. On an average, I want you to trade about 2 to 3 days a week. Steve, that's not enough. I got to trade every day. The market's open 6.5 days a week. Why the hell can't I trade? I got to trade. This is for the Glorias and the other people that have to trade during the wrong sessions. This is how you lose money. Okay, what I want you to do is come to your office every day, but only take the best setups at the right timings that I'm telling you. That's how you're going to be successful in the business. Think for a minute. If you took 2 trades a week, but they were dead on perfect, and you took 50 lots and hit 50 pips, you're looking at about $200,000 a month. I'll say it again. If you take 2 trades a week with 50 lots and hit 50 pips, you're looking at about $200,000 a month. Now, I know some of you can't live on that. Your budget is crazy. Maybe your wife shops too much. But that is what I want you to learn how to do and to become perfect at hitting your target and only taking second leg trades. That's what I mean about time of day and work ethic and all those things I've been talking about in the business. Second leg formations with 50 lots on is the perfect trade when you hit your limit. Show up every day and have a good work ethic. But only take the best work ethic is only take second leg trades that are crystal clear to you and bag 50 pips. Then you add the contracts and that becomes an unlimited amount of income for you or your family, or however you want to handle it. Okay, news releases. I can't say enough bad things about this. Don't get caught up in news, chasing it. It's all BS. Market makers use news and rumor to complete the patterns and take your money. Don't do it. All right, for those of you, this has been a big sticking point for everyone in the class. I don't know why, but I'm going to cover it one more time. I stuck the slide in there. Here's the deal. Actually, you know what I'm going to do? I'm going to write it on the board in Eastern Standard Time. How about that? Maybe this will finally fix it for everyone. Okay. I get a lot of emails about this. I don't understand it, but if you don't get it, I'm here for you to get it, so let's get it. Okay, let's see. Okay, the first session, the Asian session. All right, and I write horrible on this thing. It's with my mouse. I'm sorry. Okay, the first session is from 8:30. This is tough. 8:30 to 3 a.m. 8:30 p.m. to 3 a.m. Eastern Standard Time. The gap time is from 3 to 3:30. This is horrible. a.m. What is the gap time? The gap time is this guy talking to this guy, telling him he's done for the day. This is the second session, or the London session. From 3:30, technically 3:31, but from 3:30 to 9 a.m., all again Eastern Standard New York time. is the entire London session. From 9 to 9:30 is the gap time. AM. Okay? In Forex, for some reason, in New York, or that exchange, I don't know if it's the lunch break, the lasagna, I don't know what the hell those guys eat up there, but from 9:30 to about 12 or 1 p.m., man, that's a horrible 2, sorry. That's a 2, by the way. From 12 to 1 p.m., okay, the market usually goes back into consolidation sideways. The session does, in fact, go on to 5 p.m. for the start over again. But around 12, 1 o'clock, it goes back into consolidation and becomes quiet. Okay. I had this on slides, but I'm going to cover it again. Your blue box needs to start painting at the day changeover line on your dealer, whatever time it is, 5, 6, or 7, whatever. Okay? It needs to stop painting around 1 a.m. Does it matter if it's 2? Does it matter if it's 12? No. I told you, and you are smarter than a blue box. The blue box needs to stop painting around 1 a.m. How do you check that? Get in front of your computer at 1 a.m. see if the box stops painting. If it's not, figure out, adjust the time up or down to make it work that way. That's what you have to do for your dealer. I don't know all the dealer offsets. There's a lot of dealers out there. I don't know FXDD setting. That's why Kim offered to put MIG in this class. So you drop it on there, it sets perfect. Okay? If you're trading at FXDD, don't leave them. Take the signal from MIG and execute it at FXDD. That's fine. Especially if you had good success with them and they treated you good. Don't leave a dealer that's treating you right and that you've gotten money out of and haven't had any problems. Okay? During the midday, you see, like lunch break, you see some consolidation. When these guys take lunch, like in New York and stuff, you get the sideways consolidation, but if something kind of funny happens here, the consolidation / lunchtime lines up with one of the levels. Isn't that amazing? How around mid-session, you get that. Okay, so understand that when you get the sideways consolidation after the shift from the high level zone, these guys go on lunch break, this is what kind of happens. That actually happens sometimes. I lost my train of thought, that's crazy. All right. The consolidation lines up with either gap time or lunchtime. That's what I meant to say, sorry. Okay, so it's kind of neat how they might come off the peak formation high right around gap time, go into level 1 consolidation, then make the second move mid-session and go into consolidation mid-session, and what really happened is they just walked away from the helm and it's lunchtime and the market turned sideways and us retail traders are beating it up back and forth and doing level 2. It's kind of crazy. It happens to coincide at lunchtime. It's neat. Okay, now, does everyone understand the times? I'm going to go over the blue box and red box one more time in my slides, but this is very important that you understand trade the last quarter of the blue box into about mid-London. That's when you're looking for the setups. Can they happen at different times? Yes. But this is how I want you to structure your day. Okay. Hopefully that cleared up the times. The other thing I was going to tell you too, and in the winter time, we are GMT -5 in New York. In the summertime, we are GMT -4. Okay, this affects London trading hours only. Why? Because in the U.S., they still coordinate the changeover with the 9:30 equities open. So daylight savings time is a non-issue in the U.S. at the U.S. session. They coordinate it with the equities open at 9:30. So in the winter, the session's an hour longer. London, in the summer, it's an hour shorter. So keep that in mind. Understand the blue box and red box are merely reference points on the chart. Can they bust them out and move? Of course. I told you that already. You're smarter than a stupid little box on there. But it gives you a general guide of what's going on. And sometimes it's so beautiful out of the box with 3 swipes to the high or low, and it shows up perfect that you can't miss it. A blind man can trade them. And sometimes it's not so easy. When it's not so easy, take a pass. There'll always be another trade tomorrow. Okay, I hope we're clear on the timings. Okay, there we go, the box. Here it is for your notes. Write it down. Do I really have to say it again? Blue box will paint at the start of each day, 5 or 6 p.m. depending on the dealer. We'll stop painting just before the London Open around 1 or 2 a.m. Give or take an hour, because the dealer is absolutely fine and acceptable. The purpose of the box is to help you identify the 3-level stop hunt, or 3 swipes at the high, 3 swipes at the low. It will also identify the Asian range, the Asian high minus the Asian low, and it will print in the bottom left-hand corner of the box. If the box is greater than, anyone? 50 pips? Yes? The box is considered blown out. Okay? Can you still trade a blown out box? Yes. But ideally, 50 is perfect. Those are the best setups come from 50. You ever seen a 20-pip box? The tighter that box winds up, it's like a spring, man. It gets tight, tight, tight. The man explodes out of there with a huge stop hunt and makes a monster drop. When you see market makers holding a 20-pip Asian range, start licking your chops, put a bib on, and get out your spoon and fork. You are going to kill it. The tighter the Asian range, the more likely you will see an aggressive move that day. The tighter boxes are usually seen on Wednesday, Thursday, and Friday. Okay, red box. We'll paint at the start of the U.S. session, 8 to 11. We'll help you identify the New York City reversal trade. Simple. Okay, here they are. There is the width of the box pointed out. Okay, when the guy programmed it, we needed to know the Asian range. There's a nice 40-pip box right there. It was no extra money for him to program it in there and just put it in there so we could see how much it moved during that time period. That's all. Does it mean anything? No. This is the one I'm concerned about right here. The Asian star. See the black tracer? That's the start of the day at this particular dealer. Right here is 1 o'clock. This is the 1:15 candle. That's it. This closes at 1:15 and opens here. Okay, simple. All right. The method. Let's start trying to put all the stuff I've been talking about together. Timings and 3 swipes at the high and 3 levels of rise and crazy candlesticks. Let's start putting this stuff together, okay? This happens to be an M-top double railroad tracks. It's kind of neat. This is on the 1-hour chart going into the next day. You know that this is the peak formation high when you see this. Railroad tracks high on both sides of the line. You know that that pair is dropping. They put the exact breaks right on the top. They went the next day right to it. Peak formation high over 2 days. Game over. It's a short. Okay. Some of you say you need a second to catch up. Told me to slow down. I am on my 5th Diet Coke. There is no such thing as slow down for me right now. Okay, if you guys are writing, I'll wait a second. Okay, how do we check down the pairs? How do we decide what we're going to trade? Okay, starting in a U pattern, from the upper right to left, the higher time frames to the low, look at the 4-hour, 1-hour, 15-minute chart. That's what we're looking at. I want you to ask yourself these questions, because this is it. This is what you need to know. What level am I in on this pair? What level is it in? Level 1, level 2, peak formation high, double top. What are you in? Where do I think it's going? Where's it going? Peak formation high, level 1 consolidation. I expect a straightaway on that pair today. Well, you know what? I don't really like straightaway trades. They piss me off. I'm not that good at picking them out. I'm going to pass on that pair today. Or, hey, this pair looks like it's acting like it's at level 3. I actually noticed the head and shoulders in there. I'm going to see if they hit the stops one more time coming out of London and look to go short on that, because that's a level 3 behavior for sure. I got this. What day of the week is it? Is it Sunday where it's slow? Aim for less pips on Sunday or Monday. Don't go for the 125 pip ADR run. Go for the 50. Go for 45. Is it Wednesday, Thursday, or Friday? Have I identified the midweek reversal, and I expect a unidirectional swing from Wednesday, Thursday, Friday to end the week with the trap traders down off of the low or high? Where am I in the cycle? What has happened on the last 3 days? Go back. Wednesday, Tuesday, Monday. I'm looking back. What do I see? Man, that looks like Wednesday looks like today's Thursday, and I see Wednesday made the high. Man, if they repeat that high, it's been 3 days. If they repeat that high coming out of London but miss it and don't take it out, that's probably the midweek reversal. I can convert the spot trade to a swing trade and hold it till Friday afternoon and make 197 pips with 2,700 scale-ins, and I can hang out with a Subio on Saturday afternoon and have breakfast. That's the kind of stuff you have to ask yourself. Okay, that's what you have to ask yourself. These are the questions. I'm going to pause for a second and let you write them down. Okay? Exactly how I walk through it is what you're looking at. You're not just going, yeah, that's the 4 hour, it's up. That's the 1 hour, it's up. 5 minute, 15 minute, yeah, that's nice. That's not what you're doing. You are trying to figure out where you are in the market maker trend and the market maker cycle. Those are the questions you have to ask yourself. If you could identify where you are in his cycle, then when the pattern presents, you know if it's good or not. If you know that you're coming out of level 1 consolidation off the peak formation high, and the market maker makes the move down and paints a W, you know that that's a BS trade, that it's a fake out. You're a seller. He's trying to trigger the breakouts in both directions. So when he comes out of level 1 consolidation to the downside and makes a W and goes back in, you're a seller in line with the peak after he makes that fake out to grab the breakout traders the wrong way. Get it now? Understand? That's why you need to know where you are. You don't just take M's and W's and just see what happens. That's not what we're doing. What you're taking is, where am I in the market maker trend? His cycle, his 3-day cycle. Peak formation high, I see the shift off the zone. I'm in level 1 consolidation. Today in Euro, I expect a straightaway. When he breaks down and makes a W, you are not a buyer. You're simply waiting for him to go back into the range and hit the stops high after he absorbs the breakout trades. Why wouldn't I take that? Simply because we don't know if he's going to trigger the stops 15 pips, 20 pips, or 50 pips. So it is not a trade that will pay out aggressively like we're looking for. So now when he hits them high, in line with the peak formation, now you're a seller. Some people are saying, Steve, what the hell are you talking about? If you don't know by now, I don't know. Look, it happened in Euro this week. Understand. This was the peak formation high right here on December 14th. Market maker went into level 1 consolidation. This was a beautiful W, and it offered up 50 pips, but this is back towards the peak. If you understand this pattern and can see it clearly, absolutely trade it both ways. I know they did, Kim did it, I know a lot of people did it, made a fortune. But here's the problem. Some people also wrote me and said, I took that W and it only offered up 60, 70 pips. What was wrong? Why did it fail, Steve? Your method sucks. They don't understand because they traded against the peak, and this pair or this price point will not go above that peak. Because if they go above that peak or too close to that peak, all the traders trapped in this aggregate can book a profit. They are not in the we're going to let you book a profit business. They're in the we're going to take your money business. So if this pair goes back towards the peak high and breaks it, then that means that lower level shorts outweigh higher level longs, and that's why they broke the pattern. But what happens here is they traded back towards the peak. Notice that I said at the session changeover, the little red box. Look to take a profit at session changeover. They broke low, aggressively made a W, held it for hours. They ran it up, triggered all the stops, absorbed the breakout traders, crushed them. You could have took this for 50. When they made the second pass inside the red box, back in line with the peak, that was lights out. But that's another 50, or that is an anticipated run. That's a runner. Why? It's in line with the technical trend and the market maker trend. The hell you mean, market maker trend and technical trend? Price broke below the 50 and the 200. That's technical trend. Price also broke in line with the peak after the high was formed from yesterday, coming out of level 1. That's market maker trend. Those trades are runners. Okay? Think where the money is. Think where the money is in the direction that the money's moving. I know this is hard for you to see. A lot of people are writing saying they just can't get their head around it. I understand. That is where the homework comes in. Okay? If you don't see this, what I'm talking about, go back and do some homework. So now, back to what I'm talking about. Check the charts down. 4 hour, 1 hour, 15 minute in the U pattern. What does the 4 hour look like? Do I see 3 big 4 hour rise candles and then a big spike or a chop? I'm in level 3 on the 4 hour chart. Confirm with the 1 hour. Man, the 1 hour throwing railroad track where that 4 hour spike looks like. Look at the 15, man, it's choppy. Steve said when it's choppy, head and shoulders, it's crazy. I'm at level 3. Guess what? I know the trend is up because I've read a lot of those books, but you know what? I'd be stupid to be long right now. I'm going to go short because I'm smarter than those textbooks now. I know better. The trend, it's a reversal day. I see it. It's Wednesday. All these things coming together that we talked about here for the last 3 days are making you change your bias against the prevailing mentality and trend that's out there. This is what I'm talking about. Is anyone still writing the slide down? This is a slide I implore you to make notes of. This is not one you want to fish back through the recording. This is a slide you want to make notes on. Exactly what I'm talking about. Okay? I'm going to give you a minute. It's 8:55 now. I'll give you a minute to write it down. All right? Okay, I'm back. All right, a couple of questions popped up. I want to address them. I don't want to leave them go because we're talking about this section. What the hell am I talking about with a U pattern? Is it U pattern or my pattern? No, it's a U pattern. You're looking at, it's simply just a way to look at the charts, okay? Let's see. All right, I'm looking at, well, times are off on here. These are a mess. 1 hour, 15. I'm checking in a U pattern. I'm looking at the 4 hour, the 1 hour, and the 15 minute. I'm just checking down. What do I got? Do I see 3 levels of rise on the 4 hour? Does it confirm with the 1 hour? I'm just checking down in a U pattern. I take my signals from the 15-minute chart. But I'm trying to establish the market maker pattern and direction from the 1 and the 4. Okay? Understand? I'm trying to get the market maker direction from the 1 hour and the 4 hour. When you've been doing this for a while, you won't look at those charts anymore because you'll see everything on the 15-minute. Okay? So, when you're learning and trying to master this to try to see what level you are in, look at the 4 hour, 1 hour. You're looking for 3 level rise, 3 level correction, level 3 behavior. Where am I in the market maker cycle? If you can identify where you are in the cycle on the 15-minute chart, throw those other 2 charts in the trash. Those charts are merely a guide to help you understand where you are in the market cycle. That's how you trade. When you are done looking at the check down, you should only have a 15-minute chart open anticipating the M or W depending on where you are. If I have 3 levels of rise in the pound, and I'm at level 3, and I identify that right before the London Open, I open the 15-minute chart, I am a seller today if they hit the stop high. That's how I take my trades. Okay, now, I identify 3 levels of rise on the 1 hour, 4 hour. I get my 15-minute chart ready. What am I looking for? The box is 50 pips or less. Good. Check. Market makers trigger the stop high? Yes. 25 to 50 pips higher? Yes. They create a formation, railroad track, spikes to the high, 2 pins to the mayonnaise, 2 pins to the water, some type of signal that we've talked about to confirm that I'm a seller. Second leg M I'm looking for. Right? All those things come together in line with where I think I am in the cycle. Lights out. If that cycle happens to line up with the technical trend, you're probably going to get a nice run today. Okay? Is it Thursday? Man, it's Thursday going into Friday. The positions were building all week. Now I'm looking for the runners. Now what happens? You're a seller. You sell upward stop once against or in line with market maker trend. It happens to roll over. Now you're looking for 3-level drop into the U.S. red box. W formation is the exit of that trade. You stop yourself out, reverse, and go back the other way into the range. Simple, right? That's what you're doing. That's it. That's the business. Some of you already get this. Some of you are already doing this. But if you're lost, this is what you're doing. This is what you're supposed to be doing. Okay. The daily chart. There's only one thing I care about on the daily chart. What color is yesterday's candle? That's it. Why? I said this before, I'll say it again. The daily chart is too slow for my method. By the time that thing paints, it's worthless. Okay? So, we use a calculation for pivot points. Pivot points is a man-made indicator to help us identify this pattern further. Are they accurate all the time? No. But do they work a lot of the time? Yes. This will help you in your trading. Remember what I said? I took man-made indicators and put them on the chart to help us make the conversion from typical textbook stuff to our method. This is what I'm talking about now. We're going to add pivot points, some TDI signals, our own signals, sharp fins. We're going to add 200 EMA, mayonnaise, 2 pins to the mail, sharp fin, hold the mail, that kind of stuff, the joke trades we have. This is the stuff I'm going to start tying together for you. Okay? Does anyone need a 10-minute break after eating? It's around 9 o'clock, or, yeah, it's 9 o'clock. Yes? All right. This is a good place to break. Let's break. We're going to go for another hour, hour and a half, whatever we need to do, okay? Okay, back about the stops. I've said this, but understand that if you have a good grasp on what the hell I'm talking about or my method, you're rarely going to be wrong in your trades. I have students sending me emails that they hit 8 out of 8, 9 out of 10, 15 out of 15 trades in a row without dumping a trade. That's absolutely incredible. Think about that. To not be wrong in your assessments. You become highly selective, take second leg M or W, you're not going to be wrong in your trades. It's in the chart. It's there all the time. A stop of 3 times in a row is very unlikely because of the levels. So you're not going to be wrong 3 times in a row. You're going to be wrong 2 times. On the 3rd time, profit will be realized if you count the levels and see where you are in the cycle. Once this is mastered, you need to ramp up your contract sizes to maximize your gain. I'm working on Dick Schmidt out in California. I hope he doesn't mind me mentioning him. He's nailing down about $1,000 or so a day, trading 1 lot. He's making 100 pips a day. That's $20,000 a month. That's $250,000 a year trading 1 lot. Dick, if you're listening, ramp up, buddy. You're killing this thing. I want to see you make $500,000, $600,000, $700,000 a year. It's so obtainable. You're right there. You're one of those guys that are absolutely knocking this stuff down since we got together, and I want to see you really knock it down. Anyway, I'm not picking on you. You're doing fantastic. I'm very proud of your success. Okay. Market makers create sentiment and act against it. They use the news and rumor to take your money. What do you mean? Someone mentioned yesterday about grease falling apart. You remember all that stuff was out? The pattern's in there, right, when that stuff came out. It was completed. Exactly the way I've drawn it for you since you met me. Exactly the way it's designed to take your money. Okay? They use the news, rumors, stuff on CNN, CNBC. They perpetuate the myth by saying, oh, you shouldn't be long right now because of this or that. It's all BS. They use the news to help them reach their targets. They use the releases, non-farm payroll, FOMC, the other releases to help them reach their targets and complete the pattern. Okay, someone's saying the audio is very loud. A couple of people are saying that. Do me a favor. Turn your speakers down. Because you know that if I go in there and start messing with the settings, it might be over again. Sorry that it got like that, but I don't know what to tell you. Lower your speakers. If I go in there and start horsing around with settings, we might have to reboot again. All right, so they create a sentiment in the marketplace. We've heard before. Think about this. When Euro was tanking, and they said, oh, the Eurozone, they might devalue the currency or break it up and go back to the old currencies. It was BS. That didn't happen. They're not going to do that. But surely market makers are using that news to reach their targets and turn against people. How come the euro came back from that? If that was really true and the economy was unrecoverable over there, why didn't the dollar gain strength and the euro keep tanking? They put the brakes on and reversed, and euro rose for a month or so after that, after they created the sentiment and acted against it. They create something in the market. They show you something that looks like something from a textbook. They show you price below the 50 to 200. They might show you that on a daily 4-hour chart. You think it's a downtrend. You sell into it. They put the brakes on and kill you. That's the business. Understand that. All right. Write these down. In Forex, if you didn't hear me say this, here it is. The fast move is false. Never chase rising or falling currency. It's for amateurs. Here's the money part. Market makers drop the market to buy and accumulate contracts. Market makers raise the price or pump it up to dump it. When price is shooting straight up, they're getting a better place for them to dump it. They will extend the high and low in 3 swipes or moves. Will it be 3 candles? Maybe. In that EJ chart I showed you, it was 3, consolidate 3. Amazing. Remember that 3 is a trick against you. 3 is a trick to mess your psychology up. The trend run is slow and steady. 6, 8, 10 hours right through the U.S. session. Market makers need to book profit. They are traders. They just happen to be trading against you, but they are in fact traders. Market makers need to book profit, so the trend will contain 20 to 25 pip pullbacks and 3 levels of move with corresponding levels of consolidation. I know that's a mouthful, and Judith, don't correct my English and stuff when you mark it up tonight. There's no punctuation in there. Market makers need to book profit also, so the trend move will contain 20 to 25 pip pullbacks. Do you ever wonder why the move it goes up and comes back down, and then goes a little higher and comes back down? Because there is money at every single price point. They have to book. They have to take money off. They don't have unlimited capital. So they're booking profit along the way. When you get them hit the stops in those little consolidation zones, that's them taking money, relieving the buying and selling pressure to make it light work of the next move. A powerful or extended move is almost always followed by consolidation to bring traders back into the fray, level 3. What happens? 3 levels of rise, 3 days of rise. They hit the high, hit the low. They go into a chop. They're cleaning the board. That's when they make most of their money, right? They pump to dump, and then when they get to that higher price point, they absorb all the contracts. You see it rising for 3 days, the old you, and you say, man, it's an uptrend. You buy at the worst possible point, level 3. They sell to you. Now, they are heavy short. The world is heavy long. They drop the price. They chop and hold those levels and act crazy at level 3 because they're hitting the stops in both directions, getting traders to commit the wrong way. And think about what happened if they made a trend run against you, you were going the wrong way. You take some time off. Level 3 is simply the act of getting people to come back into the marketplace. That's why the erratic behavior at level 3. Hitting the stops, collecting the contracts, getting traders to recommit. That's what level 3 is. And a lot of times level 3 becomes level 1. When they hit the stops at a level 3 high, it makes the new peak formation before the reversal. Okay, do you guys get that? Do you see it? Okay. We're going to do some basic technicals after the break, but I'm going to stop with this slide. And since I lost you for 5 minutes, let's do a 10-minute dinner break. I'm going to grab something to eat and, of course, another Diet Coke. You know, I had to tell you, there's some friends of mine in New York They're actually betting on how many Diet Cokes that I drink in a 4-day session. And I thought it was kind of funny. They told me the over-under is 25. And somebody had me over 25, but I could tell you that I have 2 12-packs in my fridge in my office for this class. And there's just enough left for tomorrow, about 6 or 7. So the over-under is less than 25, right in at 24. You were close, buddies. But anyway, you guys are hilarious. All right. I'm going to give you some basic technicals to apply to what we've been learning for the last couple days to help you, the stuff that's man-made that's out there to help us see this pattern. Okay? Guessing is a 50-50 shot. We are not in the 50-50 business. We're in the 90% plus business with dead laser accuracy. By mastering this market maker pattern, you can reach your trading goals, whatever they are. Okay? If you live in New York and can't afford your parking, we can fix that. If you live out in California and can't afford your registration, we can fix that. All right, we're going to figure out a way for you to reach your goals, whatever they are. If you want to make 25 pips a day, we're going to do it. If you want to make 2,500 pips a day, we're going to do that. Okay, let's stop here before we go into the technicals. And I'm sorry for the short recording. Let's just, instead of a 15, let's make it a 10. You guys go to the bathroom, eat something, open a window, whatever you need to do to feel good, and we'll go for a couple more hours and wrap it up. All right, I'm going to break. Thank you.